He's also an editor to GST Tariff by R.K. Jain, which I think is a very premier book when it comes to reading GST tariff related notifications and rate related changes. My my personal view is that I think we all have heard about Sir, and there is no doubt about it that he'll keep on enriching us on this platform. His number of articles on VAT, GST, and direct taxes have been published on various professional local journals, newspapers, professional magazines. He has been a regular speaker and a visiting faculty for department trainings and at multiple C Institute related platforms and other industry platforms as well. He's also completed his PhD in comparative study of existing sales tax and proposed system of VAT regime. He secured all India 36th rank in CA intermediate exam. He's office bearer in various professional bodies like uh, Jodhpur branch of CIRC of ICI. He was there as a secretary for 2012-13, treasurer as 11-12. He is a secretary to Tax Bar Association for Jodhpur between 2009 to 11. He's member district level committee Jodhpur formed in pursuance of order of state government of Rajasthan. He's a regular blogger. I'm sure we all have seen the website gstonline.com. To be honest, just please go to this website. I'm sure the amount of knowledge that you'll get from this website alone, the number of topics that he's written, each article itself will enrich us so much that there is no doubt that we all would understand the kind of depth Sir has. So I'm sure we are all in for a wonderful session today, and these two topics will be something which have plagued the industry. They have been discussing about it, and there have been substantial impact with regard to GST, because I think rate related changes and circular relating to liquidated damages have affected each one and every one of us who have been working in this area of GST. So with this round of introduction, let me now hand over the proceedings to CA Arpit Haldia sir, and please request him to take this session forward.
Thank you, Shubham. Thank you once again. A very good evening. A very good evening to my co-speaker, Vinmar Gupta ji, and Shubham and all the participants. It's for the first time we are together on board with Vinmar Gupta ji, and with Shubham I was earlier on the same platform. And we have been a joint author of Institute publication on composition scheme, wherein we have authored the compilation for the handbook on the composition scheme for ICI, myself and Shubham. So thank you very much for giving me this opportunity for sharing the thoughts on the circulars which have been issued. It's indeed a surprise to see that we have to seek clarification and discuss what the circular is clarifying. Because as the name itself says, a circular clarifies the thing, but when we would be discussing not only in this session, but in Vinmar Gupta ji's session also, we would be discussing that what further clarification we should seek in these circulars from the government. Because somewhere down the line, as I always say, that a taxpayer and the department, these are two stakeholders, and circulars are only an interpretation by the department of their point of view. So at many a times we would see that it's a beneficial circular, but at the same time we would be seeing that the circular is only clarifying what the department thinks about a particular situation. And that we will see when we will be going through the particular circular on the liquidated damages, that how hard they have tried to press upon certain things to hold that they are taxable. I mean, at some places they have contradicted themselves just to prove that some things are taxable as under the head tolerance of an act. So going forward, we will be discussing both these circulars. So first I will be taking circular number 177, that is relating to services. So the first part which the circular tries to clarify is regarding the supply of ice cream by ice cream parlors. And this circular has a bit of history attached to it. In circular number 164, which was issued on 6th of October 2021, The circular surprisingly clarified one thing, that ice cream parlors sell already manufactured ice cream, and since they do not have a character of restaurant, because restaurant ideally involves manufacturing or cooking of food, and since they do not have a character of manufacturing attached to them, therefore they would not be eligible for having the tax rate of 5% on the ice cream sold by it. So the conclusion which they reached was correct in my opinion, but the process through which they reached to the conclusion, in my opinion, that was a faulty process. Because what they said, that since the ice cream parlors sell already manufactured ice creams, and they do not cook or prepare ice cream for consumption like restaurant, therefore it is not a service, it is a supply of goods. What was the base regulation for this? If we see that what is the supply of goods and what is the supply of service, if we go through point number 6 of schedule 2, what point number 6 of schedule 2 says, that the following supply shall be treated as supply of service, namely supply by way of or as part of any service or any other manner whatsoever of goods being food. So the goods being food, to be held as a composite supply of service, has to be served by way of or as part of any service. So supposedly I am going to a restaurant, I order some food from it. That food would not only having a cost of food involved in it, it would also be having an additional cost of services being provided by the restaurant. Whether or not I avail them, it is immaterial, but they are providing me that service. So supposedly I go to a restaurant and order a plate of say snack, and they charge me say 300 rupees for that plate. Ideally, that 300 rupees consists of say 200 rupees of food cost and 100 rupees of service cost. Whether I consume that snacks at that place only, or I get it packed and take it away, it is immaterial, because that 300 rupees includes the part of service by which the food is being supplied. And that is the very essence of the term when para number 6 says that supply by way of or as part of any service of goods being food. So for a supply of goods being considered as service, supply of food being considered as service, there has to be a service element involved along with the supply of food. Now, when I go to an ice cream parlor, keeping aside this circular, I am not referring to this circular at present. When I go to an ice cream parlor, I go and order an ice cream from that parlor, and the sitting arrangement, rarely they have a sitting arrangement. I am talking about an ice cream parlor wherein I go and take an ice cream and then go either eat it thereon or take it away from that shop. But that ice cream parlor does not have a service element attached to it. Merely putting one or two chairs for eating there does not make it as a supply of food by way of or as part of any service. So an ice cream parlor which does not have a sitting capacity but does not provide any service in addition to the supply of ice cream would definitely fall under the bracket of 18%. But not all ice cream parlors are such that there are no sitting arrangements. We take an example of say a natural ice cream parlor, which is an air conditioned ice cream parlor. There are say 30 chairs there to have to sit and have the ice cream there at that place only. Now, at that place, there is a service element attached to it. You cannot say that merely because it is a ice cream parlor. This circular at the first point incorrectly refers that all ice cream parlors would be taxable at the rate of 18%. It cannot be. Ice cream parlor cannot say, yeah, Schedule 2 does not anywhere provide that Schedule 2 para 6 excludes ice cream parlor. there can be a supply of ice cream by way of as part of any service without being manufactured therein. So if we go actually to point number 6 of schedule 2, para number 6b, what is trying to say that whenever food is supplied which does not have a service element attached to it, it is a supply of goods. And whenever food is supplied which is having a service element attached to it, it is supply of service. It nowhere says that it has to be manufactured, it cannot be an ice cream parlor, it has to be a restaurant which manufactures something. So in my opinion, circular number 164, when it said that the ice cream parlor sells already manufactured ice cream and they do not cook or prepare ice cream, they are going beyond the scope of entry number 6b. Yes, if ice cream parlor merely sells an ice cream without any service provided, it is 6, it does not fall in 6b. If provides service along with the supply of ice cream, it falls in 6b. So when I read 164 and 177, I have certain observation that at first it incorrectly highlights the term ice cream parlor. You cannot exclude a certain establishment merely because this name is there. It has to be the nature of service or nature of supply being provided by that establishment. Secondly, to the extent it says that they do not provide they provide an already manufactured item. Therefore, they cannot avail benefit of being considered service. It is incorrect. Now, take an example. If we consider that anything which is not manufactured would always be treated as supply of goods. So tomorrow, say I go to a restaurant, I order a food and I order a Bisleri bottle for water. Whether they will consider that Bisleri bottle as supply of goods? No, that has a extra service element attached to it. So in my opinion, the manufacturing concept which they have tried to introduce in para 6b of schedule 2 goes beyond the intent of the legislature. And the third and the most important point, whatever they have justified in circular 164, now they have again tried to justify it in circular number 177, saying that whatever we had said in circular number 164, it would apply only prospectively, and even if the circular says that the particular ice cream was to be taxable at 18%, it would be still taxable at 5% since the tax has been deposited in cash. Whether a circular can at all decide the levy of taxation, that what the tax has to be paid going beyond the intent of the legislature, what the legislature has said, what the notification has said, it cannot do so. Just because they have come to a conclusion, they cannot say that it would apply prospectively, and whatever has been done prior to the issuance of that circular, they are exempted from the applicability of the circular. Now, through these circulars, they are trying to trying to maneuver the taxation. They are trying to use the powers of the legislature. They are trying to use the power of the government to decide what is the applicable rate on a particular service or a supply of goods. So circular number 164, circular number 177, although the conclusion might be that ice cream parlor is taxable at the rate of 18%, but the process of reaching to that conclusion is entirely incorrect. If we go through the exact how the law has been drafted, clearly if the ice cream is supplied along with the service of say sitting and consuming, then it is a supply of service. If ice cream is supplied purely as a good without any facility being provided to sit and consume, it is supply of goods. So this is part 1 of this circular. Now coming to the second para of the circular, which tries to clarify the applicability of GST on application fees charged for entrance or the fees charged for issuance of eligibility certificate or admission or issuance of migration certificate by education institution. So all in all, what we can say that any types of certificate, whether for entrance, whether for migration, whether for admission, any fees charged for issuing any such certificate, whether it would be taxable or it would be a exempt supply. This para clarifies that since the relevant entry of relevant entry number 66 of the notification number 12/2017, it says services provided by an education institution to its student. This term student not only includes prospective student, but it also includes ex-students. So a migration certificate issued to an ex-student after he has left the school is also covered, or a certificate issued to a prospective student for the purpose of admission is also covered in this entry. So broadly, what the circular tries to say is that when the term student has been used, it covers both ex-student and prospective student, and any fees charged for entrance, for issue of eligibility certificate for admission, or for migration certificate from a prospective student or an existing student or an ex-student, that would be exempted from levy of GST. The third clarification is regarding exemption on the service of storage of warehousing of cotton in baled or gilt form. This clarification is only having a limited applicability. I don't know whether it would be relevant for the participant or, but just trying to discuss it briefly. See what it tries to clarify that prior to 18th July 2022, the storage and warehousing of raw vegetable fibers such as cotton was exempted from levy of GST. Now there are two stages. The first is when cotton is plucked from cotton plants. So when the cotton is plucked from cotton plants, this circular tries to say that it is not a cotton fiber. And cotton fiber would come into existence only when the seeds are gilt away from cotton, plucked from the cotton plants. So there are two stages. At one stage, they say that it is not a cotton fiber. When the cotton fiber would only come into existence when the seeds are gained from the cotton plucked from cotton plants. Then only the storage which is done would be exempted from levy of GST up to 18th of July 2022. After that, it is taxable, but up to 18th July 2022, this para of this circular tries to clarify that what is treated as a raw cotton fiber. Now the next is transportation of empty containers returning from Nepal and Bhutan after delivery of transit cargo to India. So the relevant entry number 9B of notification number 12/2017 says supplies of services associated with transit cargo to Nepal and Bhutan. So the transit cargo services to Nepal and Bhutan are exempted. Now the questions that was there that once supposedly once a vehicle goes to Nepal or Bhutan, whether the transit cargo coming from Nepal or Bhutan to India after delivering would also be exempt. So in this clarification, they have tried to clarify that accordingly as recommended by the GST Council, it is clarified that exemption number serial 9B covers services associated with transit cargo both to and from Nepal and Bhutan. So it would not only be to Nepal and Bhutan, it would also be from Nepal and Bhutan. Now the next is taxability of sanitation and conservancy services supplied to army and other central and state government departments. Now this is the services being supplied to central and state government departments. This is an area which has been a bone of contention not only in the GST era but also from prior to GST era. And a misconception to many of the persons is that whenever services are being supplied to central or state government, they are exempted from levy of tax. Why I'm saying that this is a misconception that when we go through entry number 3 of 12/2017, what it says is what it says is pure services provided to the central government, state government, or union territory, or local authority, or government authority, or government entity. So pure service to a central government or a state government. Say for simplification, we only treat a central government or a state government. So pure services provided to central and state government are exempt when they are provided by way of activity in relation to any function entrusted to a panchayat under 243G of the Constitution, or in relation to any function entrusted to municipality under Article 243 of the Constitution. So any service which is being provided to a central government or a state government department would be exempt only when the services are falling within the ambit of Article 243P or 243W, that is 11th schedule or 12th schedule of the Constitution of India. So if those services are helping in achieving or fulfilling the object of Article 243P or 243W, then only those services would be exempt. Otherwise, those services being provided to central or state government are taxable. So now take this example that this circular has been issued for sanitation and conservancy services supplied to army and other central and state government departments. So sanitation service which is being provided to an army or a central or state government department, or simplicity, take an example that I am providing a cleaning service to a central or state government department, whether that cleaning service would be exempt from levy of tax. Now the question is that whatever I am providing as a cleaning service to a central or state government department, whether it is in furtherance or in achievement of the object stated in Article 243P or 243W, that is 11th schedule or 12th schedule of the Constitution. Now the 11th and 12th schedule of the Constitution says that cleaning of public areas is the responsibility of the panchayat or a municipality. So now the question is that whether I am doing a function which is a function of a panchayat or municipality falling under Article 243P or W. If yes, then it is exempt. If no, then it is not exempt. So when I go through the entry and see the public place, a public place is an area which is being falling within the ambit of common public access and which is the responsibility of the municipality or the panchayat to get it cleaned. But a central or a state government department or an army cantonment place, it is not a public area, it is not the responsibility of the panchayat or a municipality or Nagar Nigam to clean it. These are the areas which are within the prerogative of the respective department. A railway station is not a public area. An area outside the railway station is a public area which is the responsibility of the Nagar Nigam or the panchayat to clean it. But the area within a railway station is not a public area. It is the responsibility of the railway station to get it cleaned. So similarly, when a sanitation or a conservancy services which are supplied to an army or a central state government department, since these activities of the department or the activity which I am performing is not falling within the ambit of Article 243P or W, it would not be exempted from levy of GST. Now the next clarification is regarding the GST rate applicable on selling of space for advertisement in souvenirs. Now take an example that your organization is holding a conference. In that conference, a souvenir is being published and advertisements are being taken for meeting the cost of publishing of that souvenir. Now whatever advertisement which are being taken and amount is being collected, whether it would be considered as selling of space for advertisement in print media. Because entry number 21 of notification number 11/2017 provided selling of space for advertisement in print media is taxable at the rate of 5%. Now the circular refers to the definition of print media, which means book, as defined in subsection 1 of section 1 of Press and Registration of Books Act 1867, and that Press and Registration Act of Press and Registration of Books Act 1867 defines book as book includes every volume, part or division of a volume and pamphlet in any language, and every sheet of music map, chart or plan separately printed. So very wide definition is given. So first we restrict ourselves to the circular, then we would venture into something which is beyond this circular also. So what this circular says, that a definition of the book is an inclusive definition. And it is a very wide definition because it includes every volume, part or a division of a volume. And therefore the souvenir would be falling within the ambit of the book, and any space sold in that souvenir would be considered as selling of space for advertisement in print media, taxable at the rate of 5%. So far so good that this has been clarified by the circular. Now the question which I had and which we discussed in one of our sessions also, that the definition of book is very wide. Souvenir is a book that we can say book includes every volume, part or division of volume. But interestingly, it includes pamphlet in any language and every sheet of music, map, chart or plan separately printed. So this definition of book includes a pamphlet as well. So whenever supposedly I am printing a pamphlet wherein I am selling some space for advertisement. If we go by this circular and the intent of this circular and the thing that the definition of book is very wide, the pamphlet itself would also be falling within the selling of space for advertisement in print media. This is something which is building blocks upon blocks, going one step at a time. So if the definition of book is very wide and they have referred the definition of book while interpreting the term of souvenir, then I am also entitled to refer it for treating it as part of book for the purpose of pamphlet or any sheet of music, map, chart or plan separately printed. So this is a clarification about selling of space for advertisement in print media, that is souvenir, and going ahead for pamphlet as well. Although the circular is only limited to souvenir, I have added an additional point regarding a pamphlet. So we can have a reference to this circular and then try to identify and come to the relevant correct meaning. Now another clarification which is only applicable up to 18th July 2022. See, there is a entry in notification number 11/2017 regarding under 9954 regarding construction supply. Regarding construction, erection, commissioning or installation of original works pertaining to mechanized food grain handling system, machinery, equipment for units processing agricultural produce as foodstuff excluding alcohol beverages. So now the question was that if a LLPD dairy plant on a turnkey basis is being constructed and being handed over by the award by the contractor to the awarder, whether it would be falling within the ambit of entry 3 subpara B clause 5, because that entry contains construction, erection, commissioning or installation of original work pertaining to mechanized food grain handling system, machinery equipment for unit processing agriculture produce and foodstuff. There were many AAR decisions which said that this turnkey project of a dairy plant is not an immovable property, therefore they would not be having a benefit of 9954. Now this circular overrides all those AAR decisions and it says that a contract of nature defined here for construction of a dairy plant is a works contract and it results in construction of an immovable property. So now another interesting thing comes. Supposedly I am a person who goes to a AAR, gets a decision, and then a circular is issued. And there are numerous instances which we are coming across. For this, there was a circular regarding the annuity on the construction of roads and the toll plaza, wherein there was a AAR of Rajasthan, then there was a circular which was issued, which overridden that decision of AAR. Now the question is, what is binding upon the assessee? It is clearly laid down in the law that a decision of AAR is binding upon the assessee. It is nowhere laid down in the law that a circular is binding upon the assessee. Neither it is laid down in the law that a circular is binding upon the department. It is only coming from the judgments that a circular is binding upon the department, but a circular is not binding upon the assessee. So there might be a situation wherein a ruling of a AAR is a beneficial for assessee, but a circular issued by the department is derogatory to assessee. Now that circular is not binding, but the decision is binding as per the provisions of the law. Now, if the assessee follows that AAR decision, he says that I will not follow that circular because it is not binding upon me. If at all it is binding upon the department, but that is also not written in the law. It is clearly written in the law that a decision of AAR or AAR is binding upon me, and since it is a beneficial decision, I will follow that decision. We are reaching to that part. There were numerous decisions in case of royalty, which say that up to 31st December 2018, the tax rate on royalty would be the same of the goods which are being excavated. On 6th of October 2021, a circular comes, and it comes with the intention that we had an intention from 1st of July 2017, for which we came to know only on 6th of October 2021 that royalty is taxable at the rate of 18% up to 31st of December 2018. And since the royalty was considered a service up to the GST regime and was taxable at the rate of 15%, how can it be taxable at the rate of goods? Therefore, we will be taxing at the rate of 18%. This is a circular which is being challenged at various forums. I'm not knowing other states, but it has been challenged in various cases of SSC by us also. Yeah, as notices have been issued on the basis of that circular, which was issued on 6th of October 2021. It overridden many of the cases of AAR and AAR. It was issued on the basis of intention. It was issued on the basis of what we had to do, but we could not do. So in this case also, this circular is overriding the decisions of AAR. And the catch 22 situation is which would prevail, whether it would be a AAR decision or a circular. In my opinion, if the AAR decision is something which is a beneficial decision, we can always say that it is a binding precedent on me. But if a circular is more beneficial, then the circular is binding upon the department, and they cannot go beyond the circular. So even if I am not following, but I am following a circular, that circular is binding upon the department. So this is something which we have to strategize. I am not saying that this is the final word of the law because the confusion is there, but this is something we can plan or strategize at some places. Now coming to the 4 clarifications which have been issued regarding the rental services of vehicles. What is a difference between a renting, a hiring, or a leasing? And if we go through decisions of service tax regime, there was a decision of Punjab and Haryana High Court which said that there is a difference between a renting and a hiring. But this circular at one place clearly laid down there is no difference between a renting and a hiring. And if we refer to section 17(5)(b), both all the 3 terms renting, hiring, and leasing have been separately mentioned. So the first thing which the circular clarifies, not on the present screen, but in the next slide also, that a renting and a hiring is one common thing. Now the question comes, the circular tries to identify the first situation, which provides for taxability of transport of minerals within a mining area, say from mining pit to a railway siding beneficiation plant, by vehicle deployed with driver for a specific duration and time. So supposedly there is a mining pit head. From there, the material are to be transported to railway siding pit. Railway siding. For that, I engage a person who gives me vehicles along with the driver. But the cost of fuel is being borne by me. So what is the transaction? The transaction is that I have some goods lying at the mining pit. Those goods are to be transported to the railway siding. And this is a regular work, day in, day out. So for that, I need a vehicle along with driver, but the diesel would be provided by me. Why? Because it has been held that such diesel can be used, purchased against CFOM. So in many of those cases, this is the modus operandi, that the vehicle and the driver is being provided, but the fuel is being provided by the recipient. Now the question comes that what is the nature of that provision of vehicle along with driver? And for this, we need to refer to the service classification guide and chapter heading 99660. Because one very important thing has been given in 99660, which differentiates between 9964 and 9966. And it says 996601 says rental services of road vehicles including buses, coaches, car, trucks, and other motor vehicles with operator. I am reading it verbatim because this is one very important clarification. This service code includes rental of buses or coaches, trucks, and other motorized freight vehicles with operators for a period of time, not dependent on distance. So if I have hired a vehicle for say 1 month, irrespective of the distance it travels, my payment might be based on the number of kilometers. It might be that a fixed rent would be given of say 15,000 rupees per month, and if it runs for say 1,000 kilometers, we will provide you 20,000 rupees. But still, the vehicle is with operator for a specific period of time. And what it says, the renter, that the person who is receiving that vehicle, defines how and when the vehicle will be operated, determines schedule, routes, and other operational considerations. So what it tries to say is that once I have received the vehicle, I am the sole person who would be deciding where it has to be operated, when it has to be operated, on which route it has to be operated, and what are the other considerations within which it would be operating. Then it would be a case of 9966. And this is what this circular also clarifies by referring to this clarification, that the person who takes the vehicle on rent defines how and when the vehicle will be operated, determines schedule, routes, and other operational considerations. The person who gives the vehicle on rent with operator cannot be said to be supplying the services by way of transportation of goods. It is a case of renting of vehicle covered under 9966. Because when a person is giving me the vehicle, I am deciding when it would be running, how it would be running, what would be the route it would be taken, and when the route would be used by that particular vehicle. So whenever this clarification along with the service guide, the explanation guide to services, the one striking thing which we can keep it for distinguishing between a 9964 or 9966 or a 9965 and 9966, that who decides the operation and the schedule of the vehicle, and whether that vehicle has been given for a particular time frame irrespective of the use or the distance it travels. If yes, then it is a case of renting. If no, then it is not falling in the 9966. Now coming to the second part, which is focusing on the same issue. But previously it was for transportation of goods. Now it is a case wherein the services provided by non-body corporate to body corporate by way of renting of any motor vehicle for transport of passengers. In that case, RCM is required to be paid. So this circular tries to identify the difference between a 9964 and a 9966. Because if the service is falling within 9966, then it is a case of renting of motor vehicle, then RCM is applicable. But if the service is not falling in 9966, it is a case of 9964, it is a case of transportation of passenger. And no RCM is required to be paid. So for going prior to going to this circular, let's try to again go to the guide for classification of services issued in GST. And for this, let's go to 996411, the first entry, which provide local land transport services of passengers by railways, metro, monorail, bus, tramway, autos, three-wheeler, scooters, and other motor vehicles. Out of the 5 points which I have highlighted, there are 7 points, but I have highlighted only 5 points. 3 are very common, which we all know that the normal passenger transportation services which are being provided by the buses or the rails. But 2 very interesting observations are there for 9964. The first is passenger transportation service over predetermined routes on a predetermined schedule within the confines of a single city or group of contiguous cities for a specific segment of users, that is colleges or enterprises. Now this is 9964. Predetermined routes with a predetermined schedule within the confines of a city or a group of contiguous city for a specific segment of users. See, the most important point is specific segment of users, that is college or enterprises. So if I am taking a bus, say for my college, for taking the students from their house to the college premises between 7 to 9 a.m. and then again between 1 p.m. to 3 p.m. on a specific predetermined schedule in a predetermined route. This is a case of 9964. It is not a case of 9966 because it is running on a predetermined route with a predetermined schedule. And then coming on to para number 5, transportation services of pupils by school bus between their homes and schools and between schools including rural areas. This is also coming in 9964. See, the tax rate might not be an issue herein because in most of the cases tax rate might be the same. But the treatment, whether it is applicable for RCM or not, that is more important. So when I go through 9964, 2 transactions which look like renting of vehicle have been classified as transportation of passengers because they are running on predetermined routes on a predetermined schedule. Now, if I go to 996413, this says this service code include non-scheduled chauffeur-driven hired bus and motor coach services within urban and suburban areas, generally rendered on a time and distance basis and frequently involving transportation to more than one destination. The most important lines are the next line. Unlike renting of bus, which gives the client full control, this service is typically provided on a predetermined route and a timetable. So again, what is the distinction between a 9966 and a 9964? The primary distinction and the sole distinction is whether the recipient has the full control of the vehicle. If the recipient does not have a full control of the vehicle, and although that vehicle is running for transporting its employees or transporting its students on a predetermined route with a predetermined schedule, it would not be falling in 9966, it would be falling in 9964. And if I go to 996601, this we have already read. The only thing which I would now like to read is the exclusion part, which says this service code does not include local, urban, and suburban bus or coach charter services provided under 996413. So predetermined and a predetermined route with a predetermined schedule is a 9964 transaction and a case wherein the recipient has full control. Say I take a bus. I have the full authority to run it anywhere in the city. Then it is a case of 9966. I take a bus, but I only have an authority to run it from 7 to 9 and 1 p.m. to 3 p.m. It is a case of 9964 running on predetermined schedule with a predetermined route. And this is what this circular also clarifies. It is clarified that where the body corporate hires the motor vehicle for a period of time during which the motor vehicle shall be at the disposal of body corporate, the service would fall under 9966. Because this circular says that I have the full control, presuming that I have the full control during that period. It is not running within a predetermined schedule or a route. I am deciding which route it will take. Then it will be a case of 9966. However, where the body corporate avails the passenger transport service for specific journeys or voyages and does not take vehicle on rent for any particular period of time, the service would fall under heading 9964 and the body corporate shall not be liable to pay GST under the same under the RCM. So wherever I am having the full control, I decide how it has to be run. I decide how it has to be operated. Then it is a case of 9966. I only take a vehicle which run on a predetermined route with a predetermined schedule. Already decided that this is the stop which you have to take, this is the time which you have to run. Other than that, you are free to do anything. And we will not be changing. This is not a case that at one day you would be going from point A to point B, at another day you would be going to point A to point C, another day you would be going to B to C. You would always be going from point A to point B. This is a case of 9964. And if I go through another clarification which has been given. Now this clarification has been given with relation to the hiring of vehicle by firms for transportation of their employees to and from work is exempt under serial number 15B. Transportation of passenger by non-air conditioned contract carriage. So what would be then be meant by transportation of passengers by non-air conditioned contract carriage? Now, if we go through para number 16.4, see the rest of the discussion which we have made remains the same. The only thing which we have to read is para number 16.4, and this only emphasizes 996413 because para number 16.4 says, in other words, the said exemption would apply to passenger transportation service by non-air conditioned contract carriage falling under 9964, where according to the explanatory notes, transportation takes place over predetermined route on a predetermined schedule. So again, a predetermined route or on a predetermined schedule. They said that this is an exemption available because this is a passenger transportation service. The exemption shall not be applicable where contract carriage is hired for a period of time, during which the contract carriage is at the disposal of the service recipient, and the recipient is thus free to decide the manner of usage, route and schedule, subject to the condition of the agreement entered into with the service provider. The common theme is running in all those clarifications, that if the recipient has the control, if the recipient decides the use. Take another example. I have taken a vehicle on hire for say 2 hours. I ask a person that provide me a vehicle for 2 hours in the entire month from morning 10 a.m. to 12 a.m. But you would not tell how I would be using. I would be using as per my convenience. If I would like, I will keep it stationed. If I would like, I will run it from point A to point B or for any point A to any point. This is a case of renting. But if I say that give me a vehicle for 2 hours from 10 a.m. to 12 p.m. But it would be running on stoppages A, B, and C, and then coming back to me. And it would not be taking any other route. it is a case of transportation of passenger on predetermined route with a predetermined schedule. There are cases which are borderline cases, but in my opinion, if we go to this concept, that is a predetermined route with a predetermined schedule, we would be able to distinguish between a 9964 and a 9966 engine. And para number 16.3 more importantly says that charter or hire is excluded from above exemption entries, charter or hire of a motor vehicle over a period of time, where the renter defines how and when the vehicle will be operated, determining schedules, routes, and other operational considerations. So all these four conditions just try to distinguish on this principle predetermined route with a predetermined schedule. Now the next clarification, GST on private ferry tickets from transportation of one island to say another island of Andaman Nicobar. Now again, transportation of passenger is exempt. The relevant entry is transportation of passenger by public transport other than predominantly for tourism purpose in a vessel between places located in India. So first thing, what is transportation of passenger? Wherein a vehicle is being used for carrying the passengers on a predetermined route with a predetermined schedule. And on through which transport mechanism it should be used? It should be by public transport. So this circular clarifies that public transport used in the exemption notification only means transport should be open to the entire public. It is not relevant that it is a government vehicle or a private vehicle. When the term public transport is used, it is meant that it is open to use by any public, whether it is owned by a private transporter or a public transporter. So therefore, any such therefore the para 18.3 clarifies that this exemption would apply to tickets purchased for transportation from one point to another, irrespective of whether the ferry is owned or operated by a private sector enterprise or a PSU or government enterprise. So these are the four clarifications on transportation of passenger, renting of vehicle for transportation of goods, or renting of vehicle used for transportation of employees, or going one step ahead, transportation of students in the school. Now coming to the next clarification, which is location charges or preferential location charges collected in addition to the lease premium for long-term lease of land constitute part of the lease premium. So the question is that location charges or preferential location charges are being collected for long-term leasing of land by a state government industrial development corporation undertaking to any industrial unit. Now the question is, when supposedly a lease amount is taken of say 50 lakh rupees, and in addition to that 10 lakh rupees preferential location charges are also taken. This circular clarifies that allowing choice of location of plot is an integral part of supply of long-term lease of plot, and therefore location charge is nothing but part of consideration charged for long-term lease of plot. Being charged upfront along with the upfront amount for the lease is exempt. This is something that when I go to buy a flat, the builder says that if you are taking a flat which is a front-facing flat to the garden, you would have to pay 5 lakh rupees extra. Now this is a preferential location charges. So normally a flat would be consisting of 50 lakh rupees, but since you are taking a front-facing flat, it would be costing 55 lakh rupees. So in this case, the 55 lakh would be treated as a composite supply. It will be part of the main principal supply, that is sale of flat. And whatever the tax rate is applicable on the flat, that would be applicable on the preferential rate charges as well. Now another interesting thing is applicability of GST on payment of honorarium to guest anchors. Now this circular, very interesting. This part of the circular is only say 4 to 5 lines, but it tries to cover many things. And if I read it verbatim, it says representation have been received regarding applicability of GST and honorarium paid to guest anchors. Concert TV and other TV channels invite guest anchors for participating in their shows and pays remuneration to them in the form of honorarium. So I am holding a TV show. I request some persons to come and then I pay them an honorarium. See, the term honorarium is something which says that I am not asking for any consideration. The person is giving me voluntarily. Honorarium is something which I have not asked, but is being given to me as a voluntary payment. So some of the guest anchors have requested payment of GST at the 18% of the honorarium paid to them for such appearances. Now this circular clarifies on the request of some of the guest anchors that whether or not tax is to be paid. So para 11.2 say it is clarified that supply of all goods and services are taxable unless exempt or declared as neither supply of goods nor a supply of service. So what it tries to clarify is that there should be supply of goods and services. All supply of goods and services are taxable unless they have been declared neither as supply of goods nor as supply of services. Reading this line and interpreting it in a manner that whatever income is being received is taxable, in my opinion, that would be incorrect. Because this line says supply of all goods or services and services. So first it should be a supply. A supply is defined under section 7 subsection 1. And it says supply includes 7.1a, B and C. And when I go through 7.1a, it says supply of all forms of goods or services against consideration in the course of furtherance of business between one person to another. So for falling within the ambit of supply of all goods and services, it should first satisfy the relevant condition as provided in the section 7.1a, ignoring 7.1b and c. So there has to be a consideration. And what is the consideration? Any amount paid in pursuance of or in relation to or in response to the services or goods being provided. So whenever an honorarium is being paid to a person, although he might not be expecting it, but it is in response to the services being provided by him and for which the person who is paying is a recipient of to those services. Therefore, in my opinion, this circular somewhere correctly lays down that the services provided by the guest anchors in lieu of honorarium attract GST liability. However, guest anchors whose aggregate turnover in a financial year does not exceed 20 lakhs shall not be liable to take GST registration. So whatever nomenclature I am using, it is irrelevant. The two things which I have to see, whether something has been received by me, which has been specifically targeted to me, specifically given to me, and secondly, whether I have paid something in response to or in lieu of those services not specifically asked by the person who has received it. Let's take another simple example. Supposedly, I file an income tax return of my client. He comes to me, I file the income tax return and he gives me 2000 rupees. Whether this would be treated as a consideration, whether this would be treated as supply. In my opinion, there might be contrary views. I don't say that this is the final word. But I have provided a specific services to a person. And that person in response to those services has given me something. There has been a reciprocal relationship. Take another competing example. That a person donates say 1 lakh rupees to a trust. He does not know that who are the intended beneficiaries. And neither the trust also receives anything from those beneficiaries. So whenever a person is giving a donation which is having no business connection, out of which he is not getting any business mileage, in that case there is no specific services being provided to him against the donation being given by him. So there is no supply between a person who is giving a donation and the trust who is receiving a donation, because the trust is not giving any service to the person who is donating an amount. The beneficiaries are some other person who are not knowing who is the person who gave that amount. And trust is also not giving any service to the donor. There was a circular on 11th October 2019 regarding the amount which is being given by a person, and the declaration made on, say, many a times we see in the memory of Mr. or Mrs. XYZ. That circular provides that this is only written for the amount which has been given as a donation. The person who has given the donation is not receiving any benefit out of that, the business benefit out of that statement which has been written. But if it is written that given by Messrs XYZ and he is receiving a business benefit out of it, then it would be treated as a consideration against the service of promoting the name of that business being given by the trust. So all in all, this part, although it is very small, but somewhere it tries to lay down a principle. Firstly, not all income is considered as supply. Secondly, if a person is receiving a consideration for the services being provided by him, although in the nature of honorarium, although in the nomenclature of honorarium, but still it would be taxable. Now, the next part is relating to additional toll fees collected in the form of higher toll charges. See, if I am having a FASTag, I would be giving 10 rupees. If I am not having a FASTag, I would be giving 20 rupees. All, whether it is a 10 rupee payment or it is a 20 rupees payment, it is only in the nature of toll and it is exempt from levy of GST. Now, coming to the next clarification, applicability of GST in the form of assisted reproductive technology in enviro fertilization. This circular clarifies that the abnormality, disease, or ailment of infertility in treating using ART procedures such as IVF is a health service, and thereby it is covered under the exemption provided by notification number 12/2017. Now coming to the another interesting clarification which is relating to sale of land after leveling, laying down or of drainage lines, etc. Whether it is taxable in GST or not. See, before going on to the circular, first we would refer to the para number 88 and 89 of the decision of Honorable Gujarat High Court, wherein they had held that the 1/3 deduction criteria being provided in the notification number 11/2017 for deduction of land is ultra vires statute. Para number 88 and 89. The last three lines of of para number 88 says, thus, if a tripartite agreement is entered into after the land is already developed by the developer, then such development activities was not undertaken for the prospective buyer, and therefore there is no question of imposition of GST on developed land. So what this line clarifies that there is a tripartite agreement entered after the land has tripartite agreement has been entered, wherein after the land is already developed by the developer, then such development activity was not undertaken for the prospective buyer, and therefore there is no question of imposition on GST on developed land. So the land was sold once it was completely developed. And once a completely developed land is sold, it is not liable to GST. This is what this line clarified. But in para number 89, they again said that we are not dealing with the case wherein the development is undertaking at the behest of another person. If that be so, then there could be imposition of tax under GST on the goods and services used in the course of development. So at one point of time, they said that if the land has already been developed and then it is sold, it is not leviable to GST. But if the land is developed on behest of any other person, say supposedly I am a person who is selling a land. A person comes to me and he says that he intends to purchase a land, but that land has to be developed by way of say leveling or laying of drainage lines or something like that. I enter into an agreement. Now those development activities are being taken on behalf of some other person. Although the land would be sold along with the development facility which I am providing, but the agreement has been entered before the selling of the land. Now the question is whether this transaction is taxable. There are two transactions. One, the developer first develops the entire land and then sells the land. Secondly, he enters into an agreement with the prospective purchaser, then develops the land and then sells the land. So these are two situations. For the first situation, the judgment by Honorable High Court clearly lays down that there is no supply there and the transaction is not taxable because it is a sale of land. But in the second transaction, somewhere Honorable Gujarat High Court does not lay down or clarifies anything, because they said that we are not dealing with a case wherein development is undertaken at behest of any other person. But then going forward one step, they also said that if that be so, there could be an imposition of tax under CGST Act on the goods or services used in the course of development. So the question is, now supposedly I have entered into an agreement with a person wherein I have to sell him a developed land. I have a land and then I carry out the activity of leveling or laying of the drainage lines for the prospective purchaser, and then after carrying out the activity, then I sell the land. Now the question which has been there for the entire past 2 years after the decision of AAR came, that whether this transaction is taxable. But in my opinion, this circular also does not clarify this transaction. This circular also falls short in clarifying that transaction. Whether it is taxable or not, I'm not telling this. But this circular also falls short on clarifying this, because the language which this circular uses, it says land may be sold either as it is or after some development such as leveling, laying down of drainage lines, water lines, electricity lines. That is either as it is or after development of certain activities which has been done. So this is applicable only when the land is sold after the development activities have been done. It is clarified that sale of such developed land wherein the activity either has been taken prior to selling and not for any identifiable purchaser, or the land is being sold as it is. It is clarified that sale of such developed land is also sale of land covered under serial number 5 of Schedule 3 of the CGST Act, accordingly does not affect GST. So this is something which everyone knew, that sale of land as it is or sale of already developed land to another person is not leviable to GST. The question is that when the development activity is taken before the selling of the land on behalf of another person, whether that transaction is taxable or not. 14.4 says, however, it may be noted that any service provided for development of land, like leveling, laying of drainage lines, as may be received by a developer, shall attract GST and applicable rate of such services. Now, this para 14.4 does not clarify that whether that amount is being received as part of consideration together with land, or it is being received separately by the developer. Now we take an example. Now we try to discuss that issue briefly, then we will be going on to the liquidated damages circular. Supposedly, Mr. A comes to Mr. B, and Mr. B is having the portion of land. Mr. A says that I want to purchase this land, but only when you would be leveling, you will be laying the drainage lines, you will be laying the water line, then only I would be purchasing it, and I am giving an advance of 5 lakh rupees. And the total sale consideration for the land and the development activities is say 50 lakh rupees. Now in this situation, the development activity is being carried out for some other person or the prospective buyer. It is not a case wherein such development activity has already taken place. So what should be the treatment? Whether it should be liable to GST? In my opinion, it cannot be made liable to GST. Because even if I treat the first thing which goes against it, that even if I am taking or developing the land for the prospective purchaser, ultimately I am only selling the land. I am not selling any other thing. And even if this argument would not hold good, then the second argument would be that what is the mechanism to arrive at the value of the deduction of the land which has been provided in GST in such cases. See the example which we took, the 40 lakh rupees land sale, wherein 5 lakh has been given as advance towards the development activity. There is a decision of Honorable Apex Court in case of Govind Gangasan that for a law to be valid, there has to be 4 basic pillars. What is the activity? Who has to pay? The law should clearly lay down 4 things. What is the activity? The taxable event on which the tax is sought to be levied. Second, who is the person who is liable to pay that tax? Third, the rate at which the tax is to be paid. And the fourth and the most important, which is applicable in this case, what is the value on which the tax is to be paid? If the law will not provide that how the value has to be arrived, it cannot be a valid levy. And what would be the value? The value would be the measure of tax. The 4 corners within which the law has to apply the tax. Because it cannot go beyond those 4 corners of the taxable event. So if the law is trying to tax these transactions wherein a developed land is being sold, and even if they are not trying to admit that this is only a sale of land, alternatively, we can also argue that there is no mechanism to provide for the deduction. There has to be a mechanism which provides to deduct the value of land, because GST cannot levy tax on the value of land. And if the value of land is not being deducted or no mechanism is there to provide for the deduction of land, it cannot be a valid levy of tax. There was a case of CHG developers by judgment by in the matter of CHG developers by Honorable Punjab and Haryana High Court in case of VAT regime, wherein tax was sought to be levied on builders and developers from 2011. And although the definition of works contract covered the transaction of builder, but the rule did not provide how to arrive at the value of the construction activity because the value of land has to be deducted. So the Honorable Punjab and Haryana High Court read down the law and held the law valid only upon the undertaking of the Attorney General, that we would be bringing in the valuation mechanism in the law, and then only we would be levying the tax. So in this case also, the first argument would always be that even if I am selling a developed land, it is a sale of land, and in the alternative, there is no mechanism provided in the law to deduct the value of land in such cases, and therefore the levy cannot hold good. Now coming to the next part, that is for the liquidity damages. If I go through this circular, see, this circular is a very long circular. This is 11 pages circular. And reading it verbatim is near to impossible because somewhere down the line it contradicts itself. But first we have to try to understand the basic theme, the basic undercurrent going to the circular, and then the issues with this circular. See, the one thing which this circular says, and the entry also says, that agreeing to an obligation to refrain from an act. There are three transactions in this entry of para 5E. What are those three transactions? Agreeing to the obligation to tolerate an act or a situation. This is the first transaction. Second is agreeing to obligation to refrain from an act. And third is agreeing to the obligation to do an act. So there has to be a positive activity that I am undertaking. First positive activity, I am undertaking obligation to tolerate an act. That there has to be a specific agreement between two persons. They say, yes, I will tolerate your act, but I need this consideration. This is a standard. This can be a standalone agreement, but there has to be a specific service flowing from one person to another, and a specific consideration being received from another person to the other person. So, what is tolerance of an act? An example has been given. There, wherein a shopkeeper allows an hawker to carry out his business in front of his shop from a pavement, common pavement. I am tolerating the act of that hawker, that he is running his own business in front of my shop from the common pavement. So I am tolerating an act of a person. There is a positive service being given by me to him. And for that positive service, I am receiving a consideration. So this is the activity covered an obligation to tolerate an act. And there can be a specific agreement between two persons that I will tolerate your act and you will give me this consideration. The second is agreeing to obligation to refrain from an act. This is something that I will not do this act. You have to pay me this consideration. And again, there is an example given that supposedly there is a non-competing agreement between two persons, wherein A says to B that I will not compete with you provided you pay me 10,000 rupees. So there is a positive service being given by Mr. A to Mr. B. The third, agreeing to obligation to do an act, that yes, I will do an act for you provided you give me a consideration. Again, there is an example given in this circular. That supposedly there is an industry which agrees to install an equipment for zero emission or discharge. Say supposedly a particular limit of emission was allowed under the Pollution Control Act. Now a person comes to an industry that I want that you install an equipment and you do not discharge any effluent from your treatment plant, and I will give you 10 lakh rupees. Now the industry is under an obligation to install the equipment for zero effluent, zero polluting water. This 10 lakh rupees is a consideration to do an act. So there are three transactions which in itself can be a part of a contract or an agreement. That yes, I am ready to tolerate an act. That yes, I am ready to refrain from an act, although which is for which I am perfectly entitled to carry out. But still I am refraining myself to carry out that act. And the third is obligation to carry out an act. That yes, if you are paying me 10 lakh rupees, I am ready to install the equipment. So these are three situations wherein an agreement can be entered on a standalone basis or as part of any other agreement, and for which consideration can flow from one person to another, and the service would flow from another person to another person to other person. And in my opinion, the most important part which the circular clarifies, and this is something which can be used by us in the longer term, and I would be reading it verbatim. Any activity done without such a relationship, that is without the express or implied contractual reciprocity of a consideration, would not be an activity for consideration. The element of contractual relationship where one supplies goods or services at the desire of another is an essential element of supply. So I have to supply something at the desire of another person, and if I am receiving some amount for that desire to supply some service, then only it would be a supply. Merely because I have received some income, that would not be a supply. So whenever we are going through a contract and trying to analyze that whether this transaction which has been entered is falling within 5E or not, we have to see that as para 6 says, the contract to do something or to abstain from doing something cannot be said to have been taken place unless there are two parties, one of which expressly or impliedly agrees to do or abstain from doing something, and the other agrees to pay consideration to the first party for doing or abstaining from such an act. There must be a necessary and sufficient nexus between the supply and the consideration. There has to be a nexus between the supply and the consideration which has been received. Merely because something has been received cannot be treated as a consideration. There is a difference between a consideration to the contract or a condition to the contract. A consideration is something which is flowing in return of something. A condition to the contract and an amount which is flowing against a non-fulfillment of a condition to the contract cannot be a consideration. So now, keeping this as the basic theme, that unless until there is an express or an implied promise by the recipient of a money to tolerate an act, to refrain from an act, or to under an obligation to carry out an act, it would not be treated as a supply. If the damages have been given, paid as liquidated damages for breach of contract, penalties under the Mining Act or excess stock, then it would not be treated as a supply, it would not be treated as a consideration for a supply of service. Now this circular tries to give various examples. And one of the most important lines in this circular is payment such as liquidated damages for breach of contract, penalties under the Mining Act for excess stock found with the mining company, forfeiture of salary for payment of amount as per the employment bond for leaving the employment before the minimum agreed period, penalty for check dishonor. These are the transactions for which there cannot be an agreement. See, there cannot be a standalone agreement that I am ready to dishonor your check, and you will once your check is dishonored, you would pay me 10,000 rupees. It can be a subsidiary part of the contract, but it cannot be the main contract. It cannot be said that there can be a service of accepting the dishonor of check against the payment being made by the person whose check has been dishonored. So whenever we are analyzing, we have to see that whether there is a positive act which is flowing from one person to another. As the circular says, that there cannot be an agreement between a government or a person that yes, we will allow you to keep more stock than the allowed stock, provided you pay us say 10,000 rupees. It is a penalty. It cannot be a consideration. So some of the examples which we have taken, I would be briefly taking and concluding the session. The first is liquidated damages. And the circular says the compensation is not by way of consideration for any independent activity. It is just an event in the course of performance of that contract. If I am being paid damages, I am not giving a specific supply of service to another person. I am receiving the damage because it is a condition to the contract that if a person does not fulfill that condition, he would pay me damages. And damages does not enhances my position. It only allows me to recoup my losses. So this para number 7 of the circular says that a liquidated damage would not be treated as a consideration and would not be treated as a supply. But interestingly, one of the examples which I would like to share and then move on to the next example. Similarly, forfeiture of earnest money by a seller in case of breach of an agreement to sell an immovable property by the buyer or the government or local authority in the event of successful bidder failing to act after winning the bid for allotment of natural resources, that is a mere flow of money, and the buyer or the successful bidder does not get anything in return of such forfeiture of earnest money. At this point of time, they are saying that if the deposit has been forfeited because the seller did because the buyer did not fulfill the condition, it would not be treated as a consideration. I have highlighted this point because this circular going forward contradicts this line itself. Now, for the liquidated damages, they have clarified that it is not a supply of service. It is not. It would not be treated as a supply. For the supply of coal blocks, penalty levied, compensation given for cancellation of coal blocks. This has been clearly provided that there cannot be an agreement that we will pay you compensation, and this compensation cannot be treated as a consideration. It is only because of the inability to provide the coal blocks by the government to another person. Therefore, it is not in the nature of supply. Check dishonor, fine or penalty. Again, they have said that there cannot be an implied willingness to accept the dishonor of check, and therefore any amount received toward dishonor of check would not be treated as supply and consideration. The next is penalty imposed for violation of laws. Again, it is highlighted that there cannot be an agreement between the government and the violator that the government would readily accept the violation of the law provided the person pays them a consideration. It is not a consideration. It is not a positive act. It is something which is there because the condition has been breached by the person. The next part is forfeiture of salary. While the employee is leaving the job assignment, there has been a decision by Honorable Madras High Court in this case in pre-GST regime, and this circular also follows that judgment and say that any notice pay salary which has been received on the leaving of the employee will not be treated as a consideration. It would not be treated taxable under the GST regime. Compensation for not collecting toll charges between 8th of November 2016 to 1st of December 2016 would not be treated as supply. any compensation would only be treated as payment against toll services, although that was not received from the person who received those services, but has been received from the government. But still, the payment which has been received for the period between the 8th November 2016 to 1st of December 2016, during the demonetization period. Although the recipient might be some other person, but the amount has been received from the government only for those toll services, therefore it would be exempted from levy of tax. The next is late payment surcharge or fees. Now this is something wherein they have said that any late payment surcharge or fees, if it is received by a person, then in such case this late payment surcharge or fees is an ancillary supply to the main supply, and it is naturally bundled, and therefore it would be leviable to same rate of tax which is leviable on the principal supply, and which is also coming from section 12, 13 and section 15 of the CGST Act. The fixed capacity charges for power. There are two types of charges. One is the minimum fixed capacity charges and second is the variable charges. So this circular clarifies that the minimum fixed capacity charges is for the supply of power. It is not in the nature of agreeing to tolerate an act or for agreeing to carry out an obligation. So therefore, this would be leviable on this would not be leviable to tax, and it would be treated as exempted supply, since supply of power is a exempted supply in GST. Now the cancellation charges. See, this part of the circular that is relating to cancellation charges, in my opinion, it somewhere contradicts itself. The cancellation charges part contradicts itself. We have discussed in the previous part that they have said that if the deposit is forfeited by the seller on account of buyer not fulfilling the promise, it would not be treated as a consideration for a supply. At one point of time, they clarified it, but in point number 11 in cancellation charges, in case of hotels, what they have tried to justify the levy of charges, how they have tried to justify the levy of charges. They have said that once a person books a room in the hotel prepares the room for it, and there's a cost involved for preparation of that room or making arrangement of that room. So even if the room is cancelled and the amount is forfeited as cancellation charges, there is a specific services being rendered by the hotel to the recipient in the form of preparation of the room for the recipient. And therefore, this amount of cancellation charges is liable to tax at the specific service, at the rate of specific service applicable upon it. So when at one point of time they say that forfeiture of the earnest money by the seller is not leviable to tax, how they can justify the similar transaction on similar footings, although having a different nomenclature, in the name of cancellation fees by the hotels for cancellation of booking, merely on the pretext that there was a cost involved in making the room ready for the recipient, and since the room was kept ready for the recipient and it was cancelled, there was a specific service being supplied by the hotel to the recipient. In my opinion, this argument is somewhere contradicting their own stand. And although para 11.5 tries to justify the contradiction in the stand, but in my opinion, it somewhere goes, the two stands are contradictory, and somewhere down the line, they would be challenged in the appropriate court. And similar is the case wherein they have tried to justify the cancellation charges being received by the tour operator, wherein the entire tour is cancelled. They have said that even if the tour is cancelled, the cancellation fees which is being charged is taxable because the tour was made ready by the tour operator and there was some cost involved in it. And since the cost has been expended for making the tour ready, so therefore the cancellation charges are against the supply of those services. So in my opinion, this part of 11 para 11 cancellation charges is not in line with the basic theme of the circular which is going on. And concluding my today's session, there is one another aspect in this circular regarding the foreclosure charges by the bank. This circular tries to say that the foreclosure charges by the bank would be taxable at the same rate of the principal supply of service, because this is an ancillary service to the main supply of providing loan. Although it is exempt from levy of tax, I am not saying that it would be taxable, because the principal supply of giving loan or receiving the interest is exempted from levy of tax. But how can it be said that the foreclosure charges is an ancillary supply to the main supply? The main supply was providing loan and then receiving the interest. The foreclosure charges are being paid as a condition to the contract, because the loan has been closed before the appointed time between the two persons, between the bank and the borrower. And it goes against the decision of larger bench of Sestat, wherein they have clearly held that the foreclosure charges is not a consideration to the contract, but it is a condition to the contract, and it can never be treated as a taxable supply. These are all the compilation of the judgments which have been there till date on this aspect of tolerance of an act. Although these judgments of AA and RRR are nullified to an extent, because in all these judgments it was held that all the charges for liquidated damages are taxable, but the circular has held it otherwise. So since it is a beneficial view, so the assessee would be always be taking the beneficial view. But this also contains the decisions of Sestat in case of larger bench of Sestat in case of Repco Finance for foreclosure charges. And looking to the paucity of time, and already I have taken some part of the time of the deliberation from Vinmar Gupta ji. I thank the organizers for giving me the opportunity to share my thoughts on the subject, and I hope I have done the justice with the subject within the given time frame. Ending the session back to Shubham. Thank you, Shubham.
Shubham, Shubham, are you going to conclude, or like should I?
Yeah, I'll just do the vote of thanks, maybe.
Sure.
Yeah. Thank you so much, Arpit sir. Honestly, this was, though I could not attend every bit of it, but most of it I have attended. I have listened to you, and it has been a thoroughly enriching session. Specifically, the land part, which I think you have highlighted, but a lot of people are now thinking that it has already been settled after the circular. So this is something which, I completely second your view that this is something which is still a very big gray area. And though the circular has been fruitful to the extent that it provides clarification regarding liquidated damages, but a lot of questions are still unanswered in terms of the agreement, though they have tried to bifurcate as to how do we delineate between something which is the cancellation charges, which is chargeable to tax, and something which is not chargeable. But still there is a huge gray area which is remaining, so which I'm sure which everyone will refer to the circular, but I'm sure there will be some litigation which would still be remaining after this. So thank you so much for giving your time, and I'm sure everyone seconds the view that this is one of the best sessions when it comes to this particular topic, because circular is something which has not been that big a area of discussion for a lot of people. They've always been focused on 47 GST council meetings. So I'm sure that now with this, a lot of people would understand that this is still a Pandora's box which is yet to be opened. Though we would not criticize the circular, because the government has done whatever they could in terms of referring to the earlier judgments of liquidated damages, that whatever they could clarify, they have done it, but still it's still something which requires a lot of discussion in my view. So just a token of appreciation from our side, and just this is something that we would like to hand you over for giving your wonderful exposure to us. And we have always been very kind. You have always been very kind to us in terms of accepting our invitations and always enriching our members. I'm sure this is not the last time that we'll be calling, because we'll regularly disturb you for these kind of sessions always in the future. And we have always got really good feedback from you, from the members, regarding your sessions. So thank you so much, sir. And if possible, we request you I mean, we understand that there have been like your commitments, but if possible, if you can stay till the end, I mean, we'll, maybe at the end, if we have some time, we can have a discussion for the question answer session. So if possible, you can stay passive or you may stay active. That is completely up to you, sir. And thank you so much once again.
Thank
And
you.
yeah, and thank you to Arpit sir. And now we move on to the second half of the session, and which will be taken up by Jay, who will be moderating the session. And we have another wonderful speaker who always has been very, who has been very in depth in his research always whenever we see his research for any topic. So I'm sure we'll all be thoroughly enriched. For more details, please stay tuned to the second session. And I hand over now the proceedings to Jay
One
for
thing
the.
I'd like to add to your observation about Vinvarji, because he was the first person who decoded the branded and non-branded aspect anywhere
Absolutely
in the, take it in any group. And I was
correct.
really surprised to see 6 a.m. in the morning he posted that post, and it was really enriching. And it was a short post, but it clearly provided what is the intent and how it has to be understood. So it
Yes.
was
Absolutely.
a very effective post of Vinvarji, and I salute you, sir. It was a great piece of writing.
Absolutely. And to be honest, I haven't seen anyone being very quick with the analyzation. Even the circular after pre-packaged circular was issued thereafter, also he was the first one to post it. And I
Yes.
always read those small, I mean, it is though his research is in depth, but the crux of the research he provides in such easy language that, I mean, it is a 2-minute read for everyone. And it provides the entire research as to what he has done. So it is commendable, to be honest. So you're absolutely right. So I thank you so much for pointing that out, and I completely agree. Now, Jay, if you can take
Yeah,
the session
sure.
forward, thanks. Yeah,
Thanks, Shubham. Thanks, Arpit sir, for enlightening us on various aspects. Now, moving ahead for our second session with Vinema sir. Uh, Vinema sir is a practicing chartered accountant, though he doesn't need any of the introduction. Like already, we all are like blessed to have him with us. He is like the Ramban for anything coming up over the night, and you get the solution immediately. You can call up the fire brigade, sir. The solution for this question raised over the night. Everyone in the industry were panicked about this package, branded, unbranded thing. Sir came up with the solution. Sir, this is the answer. You need to move ahead with these things. Moving ahead, sir's a bit of the introduction about sir. Sir Vinimas, sir is a chartered accountant. He's practicing in both the fields of direct tax and indirect tax. He has been like a special invitee and the faculty member of the indirect tax committee of the Institute of Chartered Accountants of India. He has contributed to number of the number of the sessions as a trainer for certification courses of ICI. He also is a blog writer of the website taxindia.com. More than 65 articles of in the field of direct tax and indirect taxes are published on the website of taxguru.in. He has also authored a book on GST for undergraduate students of Guru Nanak Dev University. He has contributed a comprehensive ebook for GST on services. He provides tax updates at various sites, and though personal communication using social media tools like Facebook and WhatsApp, he specializes in the handling representational and appellate assignments before the tax and appellate authorities. He has also delivered lectures at various platforms of the C institutes at the educational institutes. Some of the major ones are like Income Tax Bar Associations, ICI forums at Amritsar, Jalandhar, Ludhiana, Sirsa. So many are there. The count will be less. He has also delivered lectures on GST at forums of PSUs and various social and business organizations. Sir has taken 28-hour long session over 4 day session in Jammu branch of NIRC of ICI on special topic. He has been conducting regular GST sessions for the various chambers of trade and industries. He has conducted large-scale open question answer sessions on GST for gatherings of more than 500 people at a time. Sir will be dealing with us, rather enlightening us on the important GST clarifications and the other changes affecting GTA, food processing industries, and the major coverage will be about the GST rate and classification changes, particularly pertaining to Circular 179, and important changes in the aspect of the refund and its impact using the extension of the limitation period, impact of the changes in the food industry and the GT industry. Over to you, sir. Not taking much of your time. Sir, you are muted.
It's okay now.
Yes, sir.
Thank you, Jay. Thank you so much.
Thanks, sir.
When the appreciation is coming from Dr. Arpit Haldia, love, you have already made your day. And Shubham, so what you can say about this session? So I think I am already overwhelmed with whatever has been said about me. The topics that have been today assigned to me are on this branding aspect, GTA services, and to share a few thoughts on the Circular 179, which is the clarificatory part on the rates of goods. So first of all, coming to the lot has been talked about this branding aspect. You must have gone through so under so many sessions. Still, there are so many issues haunting. So I will be just starting the discussion from the stage. So what has happened? What has happened in this is that why this entire taxation is so important. If you look at the taxation that has been entirely that has gone by through this branding aspect is the importance is that the finance minister even had so many tweets on this aspect, because there was a people crying about that earlier the edible items were not taxable. So the government had to come out with so many tweets to clarify the situation. So how they have clarified is that there was a tweet by finance minister on 19th of July 2022. I will just go through the important aspects of it, and then I will go to the legal part. And therein, if you you will look at the first tweet, she has said that there has been a lot of misconception about the entire taxation of edible items. And there was a special mention of this state of Punjab, in which she said that even only in the state of Punjab, already more than 2,000 crore rupees has been collected in the pre-GST regime. So then she moved on to even to say about the different rates of taxes that prevailed in the pre-GST regime regarding these edible items. Like if you will look at Punjab, the rate was 5.5%. In Maharashtra, it was 6%. So the rate is varying from 1% to 6% for the different states. Now, then this tweet talks about that the earlier we had taxed all the branded items, then we moved on to a taxation where the items bearing brand name, in respect of which the actionable claim was not forgiven. These items were taxed, and now we are moving on to a new regime of this pre-packaged and labeled items. And why they have moved on to this new regime is the only intention that has been laid out in this tweet is that there was a rampant misuse of these provisions, because the items which were even branded were being posted as non-branded items. Then they have said in the fifth tweet, the government says that now through this communication, through this new regime, they want to uniformly tax all the packaged items. And then apart from 2-3 items in respect of which new form of taxation has been brought out, all other items which were already there into this branded, non-branded aspect have been converted into the packaging and labeling thing, except for 2-3 items. Now, what are those 2-3 items that we'll be discussing shortly in a new slide? Because in respect of those 2-3 items like milk, this curd, buttermilk, etc. But what they have done is that earlier these items were completely under exemption, and now these items have been brought under the conditional exemption. So the taxation in respect of these 3 items has changed. Apart from this, what they have done is that all other items which were under the branded non-branding regime, they have been brought under the prepackaged and labeled regime. Then the items that have been covered are like pulses, cereals, rice, wheat flour, etc. These are the few examples that have been discussed. And then the government went on to say that this decision that has been taken, it was a unanimous decision, and this decision has been taken to curb this tax leakage. Now let us come to what was the taxation before this. The new taxation that has come from 18th of July 2022. What was the taxation before that? So up to 17th of July 2022, the taxation was that the GST was in respect of specified food items that were put in unit container, and either these goods were under the registered brand name or they were bearing a brand name in respect of which the actionable claim or the enforceable right had not been forgiven. So what was taxable was the items put up in unit container and the items that were in the registered brand name, or maybe they are in the unregistered brand name, but the actionable claim in respect of those items were not forsaken by the supplier of goods. And the exemption then was available for the items that were put up in unit container, the items other than those that were put up in unit container and or under the registered brand name or bearing the brand name in respect of which actionable claim had not been forsaken. So the items in respect of which the actionable claims or the enforceable right had been forsaken, all those items were put into the exempted basket. Now, what was unit container? The definition of unit container that was given in the earlier regime, that is similar to the definition that we will witness in this definition of the pre-packaged commodity under this new regime. So if we look at the definition of unit container that was given in the earlier regime, it said that unit container means a package which is designed to hold a predetermined quantity or a number. And the similar definition is given for the pre-packaged commodity also. Now coming on to the few items, because most of the items are either under the nil rate or 5% of rate of tax. However, the items like namkeen, bhujia, mixture, chabena, etc., these items are under the 12% rate when they are pre-packaged and labeled. Now, the matter also was discussed by the GST Council in its 47th meeting, and the issue has been discussed. The matter went up before the GST Council that these items should also be brought under 5% regime instead of 12%, because all other edible items, these items are under the 5% regime, barring these snacks items. So the matter was brought to the attention of GST Council, and the matter was duly considered. And they have noted in the agenda that has been given by the GST Council that if you look at the paragraph, it was decided that the branded food items entail higher value addition. It is the conscious decision of the council to keep the branded package food like chips, etc., at higher rate than the unbranded food. So they do not want to give any kind of exemption for items like chips, etc. So they have been specifically brought under the 12% rate. Apart from these, other items are at the rate of 5%. Then we were just talking about 3 items which were under complete exemption. Now they have been brought under the conditional exemption. That is, they will be exempt only if they are not pre-packaged or labeled. However, if they are pre-packaged and labeled commodities, then these items will be taxed. So what are those 3 items which were completely exempt? These are curd, lassi, buttermilk, then jaggery, cane jaggery, limra jaggery, khandsari sugar, puffed rice, and its variants. So these are the 3 items which were earlier under complete exemption, and they have been brought under conditional exemption with effect from 18th of July 2022. Now, if we look at the list of items that have been affected by these rate notifications, I have compiled about 26 items which have been affected by this rate notification. A few popular items that I have marked in red, like chena or paneer, natural honey, pulses, dried makhana, wheat and mesclun, maize, rice, wheat or mesclun flours, cereal flours, all other kinds of flours, then jaggery items. So these are the popular items, and in all there is a list of 26 items which has undergone this uh, change of regime. Now let us come to what are the core aspects of this regime. First of all, what they have done is they have defined what is prepackaged and labeled. Now, what is prepackaged and labeled? The GST law does not give any independent definition of prepackaged and labeled, and the definition is then dependent upon the Legal Metrology Act. Now, Legal Metrology Act, Section 12, it says that the prepackaged and labeled commodity means a packaged commodity where the package in which the commodity is pre-packed or a label securely affixed thereto is required to bear the declaration under the provisions of Legal Metrology Act 2009 and the rules made thereafter. So what the definition is that either the package itself or some kind of label that is affixed to that package, either of them are required to bear the declaration. In case these items are not required to bear the declarations and they are still bearing the declarations, they will not be called pre-packaged and labeled items. They will be pre-packaged and labeled items only if the package itself or some kind of label that is affixed to these items is required to bear declaration. So we will have to look at this Legal Metrology Act and the rules thereunder to see what are those items for which the declaration is required. Now, this Legal Metrology Act defines what is the pre-packaged commodity. Because if you will look at the pre-packaged and labeled commodity, this definition, it is divided into two parts. The one is the item should be pre-packaged as per Legal Metrology Act, and number two, the package or the label thereto is required to bear the declaration. So first of all, we are dealing with the first part of this definition, that is the pre-packaged commodity. Now, the definition of definition of pre-packaged commodity that is given under the Legal Metrology Act is that this is a commodity which is packed in the absence of buyer. So while you are packing this commodity, the purchaser is not available there, and then this commodity is contained in a predetermined quantity. So this definition is similar to what is the definition of the unit containment. Then this package may or may not be sealed. So that is the third aspect of the this definition. Now, sometimes we may mistook this word sealed for loose item. But if we look at the definition of seal that is given under the Legal Metrology Act, it gives you an indication that the unsealed item does not mean a loose item, because what is sealed is duly defined under Section 2S of the Legal Metrology Act. So the important aspect of before going to what is pre-packaged and label commodity, we first of all need to understand what actually is the pre-packaged commodity. And pre-packaged commodity is a commodity which is bagged in the absence of buyer, number one, and number two, the product is contained in a predetermined quantity, and then the product may or may not be a sealed one. Now let us look at the second part of the definition, which says that the package itself or the label securely affixed thereto is required to bear declaration. Now the Legal Metrology Act says that under Section 18, it says that no person will manufacture, pack, sell, import, distribute any commodity unless the package is in a standard quantity or number and bears thereon such declaration and particulars in such manner as may be prescribed. And then under Section 52, the powers have been given to the government to frame rules in respect of declarations which are required to be given under Section 18(1) of the Legal Metrology Act. Now, before coming to what are the impact on the GST taxation, someone may discuss, okay, if we do not give the declaration, what harm will be caused? So apart from the taxation aspect of these declarations, there is one more aspect that we need to consider when we are dealing with these items on which the declaration is required. In case we do not append these declarations to these items, what will happen is section 16 says that these goods may be forfeited by the state government. Then section 36 says that for the first offense, you might be liable for a penalty up to rupees 25,000. For second offense, penalty might go up to 50,000, and for subsequent offenses, the penalty will be not less than 50,000, but it can go to 1 lakh. And also, you can be sent to imprisonment for a term which may extend to 1 year. However, regarding when the government came to this move of decriminalization of these taxes, this imprisonment part was removed. There was a specific circular under this Legal Metrology Act on 28th of March 2022, in which it said that there will be no prosecution will be initiated with effect from 1st of April 2022. But barring from this prosecution aspect, the other aspects of punishment, like for first offense 25,000, second offense 50,000, third offense 50,000 to 1 lakh. So these things will come up once you do not fulfill the requirement of having the declaration of those commodities. Then apart from this, section 16 also says that the goods might be liable to be forfeited. Now let us come to when the packages are required to bear declaration, because that is the most important part of this definition and to understand this entire taxation. Now there are basically two rules: Rule 6 of the legal metrology packaging and commodity rules, and Rule 24 of these rules, which deal with the aspect when the commodity is required to bear declaration. So a commodity is required to bear declaration when there is a chapter 2 which says that the provisions of chapter 2 are applicable to the packages which are intended for retail sale. So the packages which are intended for retail sale, and what are the packages which are intended for retail sale? They are different. They are separately defined under this legal metrology package commodity rules. But the packages, we need to appreciate the packages which are intended for retail sale. They are required to bear declarations. There are certain exceptions for which the declaration is not required, and that is the most important part of this entire taxation. So what are those aspects where this declaration is not required so far as the packages intended for retail sale are concerned? So if a package or commodity, Rule 3 of this chapter says that if these are packages of commodities of more than 25 kgs or 25 liters, then this declaration is not required. Then this declaration is also not required when the packaged commodities are meant for industrial consumers or institutional consumers. Now, what are industrial and institutional consumers? They are also defined under Rule 2 of these legal metrology packaged commodity rules. Industrial consumers are the consumers who are buying directly from the manufacturer or the importer or the wholesaler for use by that industry, and there is a specific declaration on those packages that these are not intended for retail sale. And then what is institutional consumer? Institutional consumer is also buying for use by that institution, and it is not buying for commercial purposes, and these goods also bear a declaration that they are not for retail purposes. So these items are outside the purview of requirement of declarations so far as the packages intended for retail sale are concerned. Another exclusion is regarding cement and fertilizer. But since the 26 items that we discuss, which are covered by this taxation aspect of edible items, we are not concerned with cement, fertilizers, and such like items. So if there is a item of if apart from this, if there is a general item which is covered by those 26 items, and if only if it is contained in a package of more than 25 kg or 25 liters, then we will say that the declaration is not required if the item is intended for retail sale. Then apart from items intended for retail sale, the declaration is also required if the item is being sold as a wholesale package. Then again, the declarations are required under Rule 24. Now question comes, what are the wholesale packages? There is a definition, detailed definition given under Rule 2R of this legal metrology package commodity rules. This definition says there are three aspects of this definition. First of all, it says because even if the commodity does not fall under the retail packages intended for retail sale, but it falls under the wholesale packages, still the commodity will not be exempt, because the declarations are required for goods intended for retail sale, barring certain exclusions, as well as for the wholesale packages. Different rules are dealing with it. Rule 6 is dealing with commodities intended for retail sale, and Rule 24 is dealing with commodities covered by wholesale package. Now, what is wholesale package? There is an independent definition. Three aspects are covered. First aspect is the wholesale package means a package containing a number of retail packages, and then these packages are sold to, are intended for sale, distribution, or delivery to intermediary, and these are not intended for sale direct to a single consumer. So the first part of this definition says that the three things should be there. Number one, in a package, there should be a number of retail packages. Number one. Number two, they should be intended for sale to a intermediary, and number three, they should not be intended for sale directly to single consumer. Then the second part of this definition says a commodity which is sold to intermediary in bulk to enable such intermediary to sell, distribution, or deliver such commodity to the consumer in the smaller quantity, then this item also falls under the wholesale package and the declaration is required. And then if the package contains 10 or more than 10 retail packages, and the retail packages are already labeled as required by this Rule 6, then again the item falls under the wholesale package. Now the question comes that a single bag of edible item, say of a single bag of 30 kgs of rice, whether it falls under this or definition of wholesale package, because if it falls under the definition of wholesale package, the single bag, then definitely the exemption is not available, because this wholesale package thing, this requires declaration. Now, if we look at the first part again, we revisit the definition. We will say the first part of this definition says a number of retail packages. So the package must contain number of retail packages. A single bag cannot be said to be a package of number of retail packages. So it comes out of the first part of the definition. If we jump on to the third part of the definition, which says package containing 10 or more than 10 retail packages, again, this single bag does not fit into this third part. Then comes the most contentious part of this definition, and which I think was also the entire base of issuing this FAQ that has been released by the government on 17th of July 2022, just a day before this taxation was to come into force on 19th of July 2022. And that is the commodity sold to an intermediary in bulk to enable such intermediary to sell, distribute, or deliver such commodity to the consumer in smaller quantities. So what it implies is that the package in which the commodity is being sold, that is so designed that from that package I can sell directly to the consumer in the smaller quantities. Say if it is a single bag which I have sealed and which is a closed bag, and without opening that seal of the bag, without opening that bag or disturbing its a seal, I cannot serve this item in smaller quantities to my consumer, then it should not fill into the definition of the wholesale package. I will give you an example. For example, say if you are selling some liquid item, and this liquid item that is contained in a container, and you are appending a sort of tap to that liquid item, and now you can pour that powdered or liquid item through this tap to be served in this smaller quantity. Only then we can say that this package is designed or this is enabled to be served in these smaller quantities. Else it cannot be said to be enabled to be served in these smaller quantities. So that is my opinion. So that is why a single bag does not fit into the definition of the wholesale package. And that is also the entire basis of issuing this FAQ, that what is covered and what is not covered. Apart from this, there is rule 26, which says that if there is an item which is contained in quantities lesser than 10 grams or 10 milliliters, that will also not be required to have any declarations. So where the declarations are not required, number one, if the package is intended for retail sale for more than 25 kgs, then packages meant for industrial or institutional consumers, they are also not required to have declaration. Then packages where the net weight or the measure of the commodity is 10 grams or 10 milliliters or less, then in these three cases, the declarations are not required and these items will be outside the tax net. Now, once this taxation came into place, there was a very interesting issue that came up, was that, okay, the items up to 25 kgs, these will be taxable, which are in a predetermined bag of 25 kgs. But this 25 kg bag, this can also accommodate, say, 25.5 kgs of commodity. This can also accommodate 26 kgs of commodity. So all those items which were contained in a bag of 25 kgs, if we pour some more quantity into those bags, so that the net weight is more than 25 kgs, whether that will suffice the purpose and the person will be outside the tax net. So that is what that is what we went through just after this entire taxation came into being. Of course, the different people can have different opinions on this contentious aspect, but what I want to put forth before you is that, first of all, once you are putting a 26 kg thing in a bag which was meant for 25 kgs, now whether you have invoice for that 25 kg bag, because when you are placing an order on a person to frame a bag, and the invoicing that he is issuing to you, then he is writing on that invoice, okay, I am sending you so many sacks of 25 kgs, I am sending you so many sacks of 20 kgs, I am sending you so many sacks of 10 kgs. So you do not have that sack of 25 kg in your stock. Now after 2 or 3 years, once the taxman comes to your place and he says that this invoice that you have issued, that is a self-serving document, the buyer's confirmation uh, uh, on this invoice that he has that where he is acknowledging the receipt of 26 kgs is also to his own advantage, because he's getting the this exempted item. So what is there on the record that will save an assessee, a registered person, from this issue? So that is the one thing that I want to put forth before the house. Then apart from this, there is one more aspect to be discussed, whether at all I can sell this 25 kg item in 26 kg bag. Because if we look at the legal metrology packaged commodity rules, there is a rule 5 which talks about the standard quantities of materials, and these standard quantities can be sold either in the very smaller quantities, say 25 grams, 50 grams, 100 grams, 1 kg, 2 kgs, 5 kgs, and then in the multiples of 5 kgs. So you can, after 25 kgs, you have to jump on to, say, for items like rice, flour, for which the rule 5 along with schedule 2 of the legal meteorology packaged commodities rule says that after 25 kgs you have to jump on to 30 kgs. Now what happened is that on 2nd of November 2021, there was a notification issued under these packaging commodity rules which said that with effect from 1st of April 2022, this standard sizing will go away. It means that you can put 26 kg in a bag of 25 kgs. But then thereafter there was another notification issued under this legal metrology package commodity rules on 28th of March 2022. Now this notification said that this standard packaging, which had to go away with effect from 1st of April 2022, now that has been deferred to another date, which is 1st of October 2022. So what is the position from 18th of July till 30th of September 2022 is that you cannot sell the items in 26 kgs. You have to sell that item in this either in 25 kgs and then in 30 kgs. So if one says, if one argues that okay, if I am selling this item in 26 kgs, then I am not violating GST law. Maybe you are not violating GST law, but at the same time, number one, you are violating this LPMC rules, for which we have already discussed. There is a section 16, items can be forfeited. There is section 16 for which there are, for the offenses for which can invite penalty up to for first offense 25,000, then 50,000, then 50 to 1 lakh, and so on. Then apart from this, the other day the officer might also argue with you. Maybe you will get relief at the level of High Court or Supreme Court, but the field officer will say, under the law, you could not sell the item without the multiples of 5 kgs. So you were legally bound to supply these items either in 25 kgs and 30 kgs. So how this presumption can be drawn, or except barring from your invoice, there is no other evidence on your record which says that you could have supplied the item in the 26 kgs, and your invoice is a self-serving document. So having regard to all these difficulties, my opinion is that one should not resort to such kind of taxation and should only sell in the standard packages of 25 kgs or 30 kgs. Now we will discuss a few issues and then we will move on to the next topic. If a person is selling rice in a bag of 30 kgs and this bag is bearing a brand name, now earlier taxation was that if your item is bearing a brand name, it was taxable. However, now the entire taxation has changed, and the declaration is required only up to 25 kgs. Now this is a bag of rice of 30 kgs for which declaration is not required, although the brand names are fixed. So this item will be exempt. Then coming on to next issue, whether the rice bag of 20 kgs is sold with plain packing. Now you are having brand name, but you are selling the goods, say in a transparent, or say entirely in a plain bag. So whether this item will be exempted, because under the earlier regime, if you are not affixing any brand name, if your item is unbranded, or if your item is not bearing any registered brand name, or the brand name, you have forsaken that brand name, then in such a case the item was exempt. However, in new regime, up to 25 kgs, the item is required to bear declaration. But if the item is required to bear declaration, but it is not actually bearing the declaration, then in such a case also the item will be taxable, because the definition of legal, definition that is given regarding the prepackaged label commodity says that it will be covered in this definition only if it is required to bear the declaration. Now, if you are selling one package of rice containing 10 by 4 packages, so it is the case of wholesale package. We have already discussed that rule 24 of this LPMC rule. This LMPC rules requires to have declaration, and so the item will be taxable. Now, if you are selling a floor bag of 10 kgs, you are buying a floor bag of 10 kgs by paying tax, and then you are selling it loose to various customers. So while purchasing, you have already paid tax, but you are selling this item as an exempt, in the exempt category, because this item is not a prepackaged commodity, because prepackaged commodity is which is sold in the packed in the absence of buyer, and number two, it is sold in the predetermined quantities. However, when you are selling the item in loose, then the item is exempt. So whatever ITC you have had in your credit ledger, you will have to reverse it. Then coming on to next issue, that a customer comes to you, he wants to buy a flour of 12 kgs, for which you are giving one bag of 10 kgs, which is pre-packed, and then you are giving you are giving 2 kgs loose. So 10 kgs will be taxable and 2 kgs will be exempt. Then if you are selling a flour bag of then 20 kgs to airport authority, then you are selling the goods to the institutional consumer, where you are giving a declaration that these items are not for retail sale. So this item will also be exempt. Then there is a bag of say 25 kgs of flour, and along with this bag of 25 kgs of flour, you are selling, you are also giving 250 grams, not for sale purposes. You are giving this item as free. Now, when you are giving this item as free, the circular 92 says that when you are giving two items, you are giving one item for some consideration and you are giving another item for free. There the example of buy one get one free is given in the circular 92. The circular says that it will be treated that for both of the items you have charged consideration. So when the consideration has been charged for both the items and both the items are for less than 25 kgs, then the entire consideration will be taxable. Then if there is a separate single bag of 250 grams given along with separate single bag of 250 grams, then again the item will be taxable. However, if you are putting this 250 grams flour at extra in your 25 kgs, then you will have to look at that whether this bag is complying with Rule 5 read with Schedule 2 of the legal metrology package commodity rules. So if you are selling this 25 kgs along with 250 grams, you might claim exemption in your invoice, but it will be difficult for you to prove that you have put 250 grams into that bag. Now let us take the last issue, that if you are selling your goods in a bag of 30 kgs, and along with this you are giving a free bag of 300 grams. Now in this case, say you are charging say rupees 1000 for this 30 kgs flour, and you are giving this 300 grams free. Now in this case, the exemption, the taxability is up to 25 kgs. So this 30 kgs bag is actually exempt, but the 300 grams quantity being lesser than 25 kgs is taxable. So my view is that although no guidance has been given in the law, nor any guidance has been given in the circulars or FAQ that have been issued by the government. However, my view is that in this case, you will have to divide your consideration into this 30 kgs and 300 grams. Then you have to pay tax on this 300 grams, although this item is being given free of cost, but the consideration will have to be divided into this 30 kgs and 300 grams. And accordingly, the tax will have to be paid on 30 kgs. There will be exemption on 30 kgs bag, and the 300 grams will be taxed at the rate of 5%. Now coming on to the next discussion that has been assigned to me is regarding the Goods Transport Agency. So what are the changes that have taken place in the taxation of Goods Transport Agency? That since Finance Act 2004, there was an exemption of rupees 750 for transportation of goods per consignee, and there was also an exemption of rupees 1500 for consideration for transportation per carriage. And this exemption was started from 1st of January 2005. Now this exemption has been first of all been withdrawn with effect from 18th of July 2022. Now it means that all the consignment notes for freight below 750, or where the freight for the entire single carriage is even less than 1500, all these will be taxable. So these consignments have moved from exempted category to taxable category. So this is one of the biggest change that has taken place so far as the taxation of this Goods Transport Agency is concerned. And how this change has been affected, that in the exemption notification in entry number 21, there were clauses B and C which were meant for this exemption, and both these clauses have been omitted. So the regime of exemption for small consignments that has come to an end. And all these consignments, now they will be at par with other consignments which are for more than rupees 750 rupees or 1500 rupees. And of course, the taxation is only in respect of goods, because when we talk about the taxation of goods transport agency, then we also need to take care that there is a exemption for so far as the goods transport operators are concerned, and the taxation is only in respect of goods transport agency. A small difference, for understanding the small difference, that where this difference lies, there is a GST flyer that has been issued by the government, which say that the special feature of this goods transport agency is the issue of consignment note. And what this consignment note implies, this consignment note is issued because it indicates the lien on the goods that has been transferred to the transporter, and the transporter becomes responsible for the goods till its safe delivery to the consignee. So that is the purpose of the consignment note. It is only the services of such GTA who assumes agency function, and that is being brought to GST net. Individual truck tempo operators who do not issue any consignment note are not covered within the meaning of GTA. So these are the very important notes that have been given in the GST flyer to understand that what is taxable and what is not taxable, and what is consignment note, that is again not defined under the GST law. We may borrow a definition that was given in the Rule 4B of the Service Tax Rules, which defines the consignment note means a document that is issued by a GTK against the receipt of goods for the purpose of transportation of goods by road in a goods carriage, which is serially numbered, contains the name of consignor and consignee, registration number, and so on. So this document is issued by a goods transport agency, and this is the receipt of goods for the purposes of transportation of goods in a goods carriage. So the important to distinguish between GTO, what distinguishes between GTO and GTA is the issue of consignment note. And then in the GTA taxation, certain exemptions which were available, they have been continued. What were those exemptions? That if the goods transport agency is providing services to an unregistered person, including an unregistered casual taxable person, then this exemption has continued. And this exemption will not be liable under RCM, either under the old regime or under the new regime that has come from 18th of July 2022. Then certain exemptions which were available for agricultural produce, milk, salt, food grain, flour, pulses, rice, organic manure, newspapers, relief material for victims, etc., etc. This will also continue to enjoy exemption. Then an issue was put forth in this 47th GST Council meeting regarding providing exemption on the transportation of items like cattle feed, buttermilk, lassi, curd, etc., etc. also. So what the GST Council said, that in the service tax regime also these items are taxable, and we do not want to widen the exemption under this GTA services or and under the entire this GST law as a whole. So no further exemption will be granted in respect of transportation of dairy products like buttermilk, lassi, curd, cattle feed, etc. So this is an important clarification that we need to consider. Even while we will be discussing the taxation of this cattle feed, the clarifications that have come, there also we need to consider this aspect, because generally we consider that the items, although the buttermilk, lassi, and curd, they were earlier under the complete exemption, as we earlier discussed. Now they have come under the conditional exemption, and the cattle feed, we will discuss that is also exempt. So though the item is exempt, but its transportation might not be exempt. That we need to consider. So you will be paying transportation charges, you will be paying tax under the reverse charge, but since the items will be exempt, you might not you might have to reverse that credit, but you will have to pay tax. Then in this GTA taxation, the changes that have taken place under reverse charges, that earlier the GTA services which were taxable at the rate of 12%, only they were outside the reverse charge. All other GTA services in respect of transportation of goods by road to the factory society, cooperative society, body corporate partnership firm, person registered under GST, or casual taxable person. If these services are being provided to these persons, then these services were liable to RCM. However, now the reverse charge has been restricted and has been limited, and in respect of suppliers who are exercising certain option under this GTA scheme. Number one. Number two, if these suppliers are issuing a tax invoice and this invoice shall contain a declaration, and each invoice shall contain a declaration, means if the supplier is issuing is number one, opting for a scheme not to pay tax under in which the recipient of service will not pay tax under RCM, rather supplier himself wishes to pay tax under forward charge, and he is issuing a tax invoice on which a declaration is concerned, on which declaration is appended, then in such a case, the reverse charge will not be applicable. Now, what declaration is required? This declaration is also given in this notification. This declaration says that I have taken registration, the GST Act 2017, and have exercised the option to pay tax on the services of GTA in relation to the transport of goods supplied by us during the financial year so and so under the forward charge. So this declaration is required to be appended on every tax invoice. Then the option that has to be exercised to come out of this reverse charge mechanism is that rate notification has been changed, and now what the new entry of this rate notification says, it says services of GTA in relation to transportation of goods, including used household goods for personal use supplied by GTA, where GTA does not exercise the option. So where the GTA is not exercising the option and wants to remain under the old regime, he can do so by paying 5% tax, by the recipient paying this 5% tax, and the condition is that the ITC will not be available on the goods and services, or the GTA earlier had only one option. There was once in lifetime option to go for 12% taxation with ITC. Now that once in lifetime taxation or under forward charge for 12% with ITC has been replaced by an option of either adopting 5% taxation without ITC or 12% with the ITC. The conditions of not availing ITC, either in reverse charge, the recipient is paying 5%, or under forward charge, the GTA is paying 5%. The condition is same, that the ITC on the goods and services shall not be available. Goods can be inputs or the capital goods. The ITC shall not be available. However, if you want to go for 12% taxation, then ITC will definitely be available on the goods as well as services. So this is the option now available with goods transport agency. Either he may opt not to pay tax already when he is providing services to an unregistered person, except for this factory, cooperative society, body corporate, registered casual taxable person, or when he is carrying this agricultural produce or milk or a rice or relief material for victims, or even if he is providing services to a registered person. In such a case, he can still go for reverse charge and not pay the tax. However, if for non-exempted items, for non-exempted services, when he is providing services to a registered person, and it is not a case of agricultural produce or milk or a rice or a relief material for victims, etc., then in such a case, the transporter has been given an option either to pay 5% tax without ITC or to pay 12% tax without ITC. Now the issue arises whether this option, because earlier the regime was that the 12% option could have been exercised only once in lifetime. Now, whether the same is applicable in the new regime also, and with what periodicity this option will be exercised. So the law says that this option, if you want to go for this option for a financial year, because this option is available for a financial year. Say if you want to avail this option next year, say from 23-24, then you will have to exercise this option up to 15th of March 2023. Now, this option, once you have gone for this option, means you have gone for 5% or 12% rate, whether you can come back to this RCM part, then the notification per se does not say anything. However, the option form says that the option once exercised, it is marked that option once exercised shall not be allowed to be changed within a period of 1 year from the date of exercising the option. So once you have gone from RCM to the forward charge for a financial year, you cannot come back to RCM regime. But whether you can switch over between forward charge as to 5% and 12%, then there is no restriction regarding this. So maybe you can switch over from 5% to 12%, say for 6 months. For first 6 months you are going for 5% with without ITC, and the next 6 months you want to go with 12% ITC. There is no restriction, but you cannot go back to RCM. Then for the year 2023, there are transitional provisions because the law was put in force in the middle of the year with effect from 18th of July 2022. So they have given a period up to 16th of August 2022 that till, if you want to go for option of paying forward charge, you can exercise this option up to 16th of August 2022. You can, maybe it takes you some days to collect tax, or for exercising option it takes some days, but you may raise an invoice and you can collect tax by issuing this invoice or debit note, provided you exercise this option up to 16th of August 2022. Now, an important issue comes up that what will happen with ITC input tax credit on inputs and capital goods that were available with me on the date of exercise of option. If the GTA is moving in the regime from 5% RCM, from RCM regime to 5% without ITC under forward charge, then in both cases the ITC is not available. So there will be no impact so far as the ITC is concerned. But what if GTA is moving from 5% under RCM to 12% option under forward charge, or is moving from 5% under forward charge to 12% under forward charge? What will happen in such a case? Now, first of all, we will consider the first is 5% under reverse charge to 12% option under the forward charge. Now, what will happen under this case is that maybe this is a case where the GTA was earlier not registered because section 23(2) read with the notification 5/2017 said that the once you have all your services, if you are providing all the exempted services or all your services are under reverse charge, you are not required to go for registration. So maybe this GTA is unregistered person and is only having an enrollment number. Now, this GTA wants to opt for forward charge. This unregistered person gets himself registered. So once this registered person gets himself, unregistered person gets himself registered and wants to avail ITC of inputs and capital goods that were available, that were held by him on the date of registration, then how much of it he can avail? For this, we can first of all look at the provision of section 18(1). Section 18(1) says, talks about the case where it is a case of compulsory registration. where the GTA is liable for registration, means he is mandatorily required to go for registration. Now, if we see the position of GTA, then this GTA is either either exempt or was under RCM. So he was not liable to be registered. He has got himself registered only by an option. So this section 18(1)(a), which talks about the person liable to be registered, is not applicable to him. However, the section 18(1)(b), which talks about the voluntary registration, might apply to this person. So the issue arises that under it, what is available under section 18(1)(b). Under 18(1)(b), we can avail the input tax credit through ITC 01 and not through GST or 3P. And the credit that is available is restricted to inputs, and the credit of capital goods is not available. So once a person opts from RCM to this forward charge, he can go through this ITC 01 under section 18(1)(b), and he can avail credit. Of course, this you have to file this ITC 01 within a period of 30 days from getting yourself registered. You will not get ITC for inputs which are older than 1 year. Then if your aggregate ITC is more than rupees 2 lakhs, means including all your CGST, SGST, IGST, etc., then you have to append a certificate of chartered accountant also. So under these conditions, you can avail ITC of inputs held on the date of registration, on the date of grant of registration. Now, coming on to, we discussed a case where the person was not registered and he comes to this registration. Now coming to another case where the person was already registered, but he was going for this 5% with RCM. Now he is coming to 12% under forward charge with ITC. Now, when he was under 5% under RCM, what are the options available with him under section 18(1)(d)? Section 17(2) says, section 17(3) says that exempt supply also includes services under reverse charge. Whether this is section 17(3) can be applied to section 17, this section 18(1)(d), because 18(1)(d) talks about the availment of ITC on the inputs as well as capital goods when a person is moving from exempted regime to taxable regime. But whether this person, this GTA, can be said to have moved from exempted regime to the taxable regime, section 17(3) gives an expansive definition of this exempt supply, but that is limited only for the reversal of ITC under Rule 42 and 43. So in my opinion, that cannot be applied to section 18(1)(d). So the benefit of section 18(1)(d) is not available to this GTA. Now coming on to other options available under the law. If we look at the Rule 43, Rule 43 now deals with the capital goods. In case of goods transport agency, the most important capital goods for the goods transport agency is their trucks. Now this Rule 43 says, first of all, it says that when the Rule 43 comes into operation, when a person is supplying both taxable as well as exempted services, so it talks about ITC, reversal of ITC on the capital goods. So first of all, the clause A says that if you are exclusively dealing in exempted items, then you need not take any ITC on the capital goods. If you are dealing exclusively in taxable items, clause B says if you are dealing other than exempted item, means if you are exclusively dealing in taxable item, then the entire ITC will be parked to your credit ledger. However, if it is a case not covered by clause A and B, now what will be that case which is not covered by clause A and B, where a person is dealing in exempted as well as taxable supplies? So what happens in case of GTA is that he is providing services both to a registered person as well as unregistered person. Supplies to unregistered person, which are not factory, etc., they are exempted, but supplies to a registered person, they are taxable. So GTA normally he is dealing both in taxable as well as exempted services. So this clause C is applicable to this registered person. However, he is not having any ITC, because what was happening earlier, that he was under this 5% regime under RCM, where under section 17(3) the reversal was required. So he has not claimed any ITC. But the proviso to rule 43(1) says that where any capital goods earlier covered under clause A, means the items were earlier exempt. Now you see this rule 43, that is within the range of section 17(2) and 17(3). Earlier we discussed about section 18. The section 18, in section 18, the principles of section 17 cannot be applied. But so far as rule 43, that is to give effect to the provisions of section 17(2) and 17(3, definitely these principles of RCM can be applied. So what was happening earlier was that this person, this GTA, he was both providing taxable as well as exempted services. Now input tax, where a capital goods earlier covered under clause A, means he was earlier exempted. He was providing services under either under reverse charge, or he was providing exempt services. So he was covered under clause A by both means, because reverse charge is also part of the exempted supply. So he was earlier covered by clause A, and is subsequently covered under this clause, means clause C, where now he is providing both taxable as well as exempted services, because now he is coming under forward charge. He is ready to pay 12% tax on his taxable services. Now, apart from this, when he is providing services to an unregistered person, these services are under exempted services. So this proviso to clause C securely covers this GTA. So this, it says that when a person was earlier covered under clause A and is subsequently covered under this clause, that is clause C, input tax credit in respect of capital goods denoted by A shall be credited to the electronic credit ledger. So you will park the entire ITC into the electronic credit ledger, with one exception, that whatever ITC you had used up to the date when you came out of the exempt regime, a calculated amount of that ITC will have to be parked to the output tax liability. How? You have to presume the life of that truck to be of 5 years. Now, then you have to calculate 5%, say if the ITC on that truck is say rupees 10 lakhs, you have to calculate 5% for every quarter. Now already 2 years have elapsed since the purchase of that truck. So in overall, say you have to discard 40% of your ITC, 4 lakhs out of 10 lakhs. So you will park first of all 10 lakhs into your electronic credit ledger, of course through 3B, and then you will also book rupees 4 lakhs as your output tax liability. So net availability of that ITC will be 6 lakhs. And then the other provisions of this rule 43 will apply by way of monthly calculation, and then appropriating it over exempted supply over total supply. So that is how we can avail this input tax credit in respect of capital goods, where a person is moving from where a person is registered and he is moving from 5% RCM under RCM to 12% under forward charge. Of course, there can be other opinions also denying this benefit, but in my opinion, how the benefit can be taken is under the provisions of proviso to rule 43(1)(c). Now, coming to another part, when a person say is moving from 5% without ITC under forward charge, is moving from 5% without ITC to 12% ITC. Now, when a person is moving within the rate notification, is moving from 5% without ITC to 12% with ITC. The explanation 4 of this rate notification says that if there is concessional rate given subject to condition that the input tax credit on the goods and services shall not be availed, then the credit of input tax charge on the goods or services used exclusively in supplying services shall not be taken. And if you are providing both taxable as well as exempt services, then it will be treated that is section 17(2) is applicable along with the rules. So again, this rule 43(1)(c) will come into play, and the ITC on these capital goods can be taken when you are entering from 5% to 12%, when you are entering from 5% without ITC under forward charge to 12% with ITC. Apart from this, a few incidental things that have taken place is regarding the renting of goods carriage. Now, the renting of goods carriage, which was earlier taxable at the rate of 18%, now that has been brought to 12%. However, the services by giving on hire to a goods transport agency, a means of transportation of goods, are exempt. So when you are renting your goods carriage along with cost of fuel, and the cost of fuel is also included in this consideration, then it is taxable at the rate of 12%. But if you are providing, you are giving your goods transport, your goods carriage to a goods transport agency, a person who is covered under the definition of goods transport agency, then that is completely exempt. Now again comes up the distinction between renting and hiring. RPG very finely brought out that although the circular says that there is no difference between renting and hiring, but there are number of judgments, like one he discussed about the Punjab and Haryana judgment in case of Kuldeep Singh Gill, and there are so many contrary decisions of the high courts. By this Kuldeep Singh Gill, this Punjab and Haryana High Court decision says that there is no difference between renting and hiring. The Uttarakhand High Court decision differs. But then there are tribunal decisions which have been maintained by the Supreme Court. The decisions which have been given by the Mumbai Tribunal, which have been upheld by the Supreme Court, which says that there is no difference between renting and hiring, and that has been so said by the circular also. So if we consider that there is no difference between renting and hiring, then what is the difference between, then where the exemption will be available and where the exemption will not be available is that if you are renting this goods carriage to a GTA, then there is exemption. However, if you are renting this goods carriage along with cost of fuel to a goods transport operator, then the tax will be 12%. Apart from this, there is also change in entry relating to the sport services. That is, sport services can be in the form of loading, unloading, storage, etc. So earlier in the rate notification, there was specifically written that all these sport services will be taxable at the rate of 5% or 12%, depending upon the option the GTA has exercised. However, now this entire entry has been removed. So from the removal of this entry relating to the support services, now we have only a residual entry, that is the supporting services in transport, which talks about 18%. So an issue arises whether these loading, unloading, storage services, warehousing services which are being provided at GTA, whether these have now come under 18% tax because the relevant entry which was related to the GTA regarding the supporting services has been abolished. My view in this regard is that so far the sport services are concerned, already the rate entry which talks about the services in relation to the goods transport agency duly covered the sport services also, because the word in relation to, they have been given by these words have been defined by Supreme Court in various decisions, that they have a very expensive meaning. The words in relation to, expensive, or pertaining to, these words have an expensive meaning. So the sport services are duly covered by the words in relation to. So my opinion is, although this specific exemption regarding the sport services has been abolished, still the sport services will be taxable at the same rate as the GTA service. So earlier there was a specific provision for the sport services. Now they will be covered under the general this entry. Now coming on to this certain clarifications that have been dealt by circle number 179. First of all, coming to cattle feed, the clarifications that have come on the cattle feed. Now, if we look at the history of, because there are a number of clarifications that have been issued on this cattle feed aspect. Earlier, there was an FAQ that was issued which said that if there is a cotton seed oil cakes which are used as cattle feed, then there is a nil rate of tax. Then there came another clarification in December 2017, which said that the rice bran, if it is used as cattle feed, that will be exempt. And then later on, the rice bran taxation was brought to 5%, except for de-oiled cakes. De-oiled rice bran was left to be was left at nil rate. However, the rice bran only, that was made taxable at the rate of 5% in 2018, with effect from 25th of January 2018. And then there was another circular issued on 31st of December 2018, which talked about the GST rate on fish meal and other raw materials used for making cattle, poultry, and aquatic feed. But this circular said that the cattle feed is different from the inputs and raw material which are used in making cattle and cattle feed or poultry or aquatic feed. Then it talked about two entries in one entry in the rate notification and the other entry in the exemption notification, which says that the cattle feed, that the aquatic feed, including shrimp feed and prawn feed, poultry feed and cattle feed, they are at the nil rated if they are covered by these tariff headings 2301, 2302, 2308 and 2309. So if your cattle feed is covered by these tariff headings and it is not an input for making cattle feed, but the cattle feed itself, then the exemption is available, and that is what was clarified by the circular. They drew support from a Supreme Court decision in case of Dilip Kumar, which said that the inputs for animal feed are different from animal feed itself, and that is where the circular also laid emphasis that the inputs per se will not entitle for exemption, but the item itself should be ready as a cattle feed. Then this latest circular that has been issued in respect of cattle feed, it is also saying the same thing. Now, what this circular is saying, this is talking about byproducts of milling of dal pulses such as chilka, khanda, and churi. It is saying the byproducts of milling of pulses dal such as chilka, khanda, and churi are appropriately classified under heading 2302 that consist of goods having description as bran, sharps, and other residues, whether or not in the form of pellets derived from sifting, milling, or other working of cereals or of leguminous plants. And then there is exemption entry, which was also discussed in the earlier notification and also given in this notification. And there is 5% rate of tax under entry 103A and rice bran, which is at the rate of 5%. So the circular says that the central argument is that the byproducts are meant for direct consumption as cattle feed, and therefore they are entitled to exemption, or they are otherwise not meant for direct exemption. Then this circular says that these items which are covered under 2302 and which are the byproducts of milling of pulses, dal, etc., these items are required to go through varying degree of processing in order to customize the color, size, aroma, nutrition, purity, etc. of the cattle feed. So produced depending upon the dietary and nutritional requirement of the cattle and the budget availability of the customer. So what the circular is saying, that these items themselves are not ready for cattle as a cattle feed, but they have to be processed. They have to add some more elements to make it ready for cattle feed. And there is also a clarification, a direction issued by the Ministry of Consumer Affairs in the public and distribution, in the food and public distribution, which says that the grain byproducts have been categorized as one of the ingredients of the compounded cattle feed. So these grain byproducts, they are only ingredients and they are not cattle feed itself. They are only ingredients of compounded cattle feed. That is what this circular is saying. And because of the multiple interpretations that were existing before this circular came into being, it has been decided that if a person has paid tax at the rate of 5%, then he will not be granted refund. If a person has not paid tax, then his case will not be opened, and he will be left with that exemption. But henceforth, the distinction will be drawn between cattle feed, with an ingredient of cattle feed. So what has been exempted is cattle feed and not an ingredient of cattle feed. So while deciding this taxation, you have to distinguish whether the item under 2302 is a cattle feed or an element of cattle feed. Then GST Council minutes, they say that the ingredients and animal feed have been subjected to a lot of litigation. For example, fish meal, meat, some bone meal, distillers, dried grains with solubles, DDGS, etc. So these items, this GST Council minute is acknowledging that there was a lot of litigation regarding these items also. So maybe these minutes can be of help to us, because the litigation is all not only in respect of the cattle feed, but also in respect of these items. So although in the circular the mention of these items has not been done, but in the GST Council minutes these items have been mentioned. So the intent is that because of the prevailing multiple interpretation, the recovery on account of this issue for the past period may not be insisted upon. So these GST Council minutes, which are given on the page 21 of the volume 2 of the agenda, so these can be of immense help to a taxpayer. Then the GST Council minutes, because these things are not given in the circular itself, they also say that if the molasses are being used to make cattle feed and they are purchased by a consumer milk union, then the uh, issue came before that the complete exemption should be given in respect of molasses, because they are to be used for cattle feed. The GST Council considered this issue and they said that the end use, that if you decide a taxation on the basis whether this item is being, because molasses is also one of the elements of cattle feed. So if you decide this taxation on the basis of end use, then things become very difficult. So no exemption shall be given for molasses which are used in making cattle feed. And similar discussion has been done for the poultry feed supplements also. So this circular also does not talk about the molasses and the poultry feed supplements, but the GST Council minutes do talk about these. So these items will also will continue to be taxable. Then it also talks about the GST Council minutes also talk about the oil cake and oil meals extracted from the oil seeds of the sunflower, soya, cotton, groundnut, rapeseed, rice bran, rice bran, maize, etc. So these items will also not be exempt. Because if you because the circular says that the oil cake is a byproduct of oil extraction and is generally used as input in preparation of animal feed. Exemption to oil cake will lead to inverted duty structure, where the oil seed will be taxable at the rate of 5% and oil meal will be exempt. The issue of exemption to oil meal and oil cakes has been discussed earlier in the 28th Council meeting, in the 31st meeting held on 20 of December 2018. However, the Council did not recommend the proposal. Already it is 8:07. I will quickly discuss on the some more changes that have taken place in the circular in circular 179 in next 2-3 minutes, regarding the fly ash bricks and the fly ash aggregates. Now, why these fly ash bricks are used? Because they are cheaper as compared to the normal bricks. Now, the changes in taxation that has taken place is that earlier there was a notification issued on 31st of March 2022 that with effect from 1st of April 2022, this fly ash bricks or fly ash aggregate with 90% or more fly ash content, that will be taxable at the rate of 15%. So the issue that arose was that whether the fly ash brick, which is having less than 90% content, whether that will be taxable at the rate of 18% and this 12% rate will not be applicable to it. because this word 90% or more fly ash content, whether this is to be read with fly ash aggregate only or also with fly ash brick. Now, if you remember, there is one Supreme Court judgment given in case of cosmic dichemical where the willful misstatement or suppression of facts to evade tax was interpreted to mean that the last words to evade tax have to be read not only with suppression of fact, but also with but not only with willful misstatement, but also with suppression of fact. So the last words to evade to tax have to be used both with both of them. Now, the clarification that has been issued herein is that as per recommendation of the GST Council, the condition of 90% or more the fly ash content was applicable only to fly ash aggregate. So what they have said is that in case of fly ash brick, you can have lesser than 90% content, say 40% or 60% content, because there was earlier also a ruling that was given by, I think in case of Deepak Kumar, something like that, by authority for advanced ruling, that if the content is lesser than 90%, then these items will not be covered under 12% and it will go to 18%. Similarly, apart from the 12% taxation that was effective from 1st of April 2022, there was another notification which said that if you want to go for 6% without ITC for the similar entry, for that also this clarification will work. And then there is a change in the entry itself, and with effect from 18% 2022, this 90% condition has been removed from the notification itself. So this clarification is only applicable up to 17th of July 2022. This 90% bird has to be read only with fly ash aggregate, and the fly ash bricks, even if they contain less than 90% fly ash, still they will be covered under 12%. Then there is another clarification given in respect of this nicotine polacrylex gum, because this is done for stopping a person from consuming tobacco. Because why this clarification came, because there was change in tariff headings because of the change in international standards. However, there was no change in the rates. The rate was earlier 18%, and that is what has been clarified in the circular, that the rate will continue to remain at 18%. Then there is another clarification regarding the treated sewage water. Now, regarding this, the clarification has been given that in the exemption notification, it is given that the water other than aerated mineral distilled water that is entitled to exemption, and the word purified that was given in this exemption notification, which meant the exclusion from this word water, has now been omitted. So this means that the treated sewage water, which even if could have been meant to be purified water, now that no longer is excluded from the definition of water. So the exemption will continue to be available. Then electrical vehicles, whether they are fitted with batteries or they are not fitted with batteries, shall invite 5% taxation. Then there is an clarification regarding Napa stones, because if a stone is a mirror polished, then it moves on to say a granite stone or something like that. Then that stone goes into the higher taxation. However, if however the other stones like Napa stones, the circular says that you cannot do mirror polishing on these stones, even if some polishing is done. That is with minimal work. Because why minimal work? Because these Napa stones, they are very brittle in nature. Because if you try to do mirror polishing on these stones will break. So whatever polishing is done by nature, the extensive polishing cannot be done on these. So these stones, even with polishing, shall continue to remain taxable at the rate of 5%. And then the last but not least, the taxation of mangoes, that has been clarified. Fresh mangoes will be exempt. Sliced and dried mangoes at the rate of 5%, and the dried mangoes, including mango pulp, that will be taxable at the rate of 12%. So that's all from my side. Thank you so much for the patient listening.
Thank you, Vinamay sir. Sir, it was a very threadbare analysis of so many circulars and the notifications and the bare minimum to minimum, like you pen down everything which was required to be understood by us and will be helping us in our profession as well as the industry in avoiding the litigations and managing our assignments at a ease. Sir, with your due permission, though there are no questions in the chat box, I have 2 or 3 questions with regard to transport industry. May I, sir?
Yes, please, please.
Sir, like supposingly there are few trucks which have been purchased at the year end. Like on the 30th of March, the invoices have been built up, the goods have been received, but the number plates, which takes a certain time as per the Motor Vehicle Acts and everything, has not been received. So the transporter is unable to use those vehicles for further provision of the services. So will the input be eligible fully in the year of purchase, or it will be determined after the number plates have been assigned and first provision of the service has been done?
You see, once as per Motor Vehicles Act, if you have been given this temporary number and the registration that takes place at a later point of time. So once this vehicle comes out of the dealer's place, then it is ready to be brought on road and it is ready for use.
Okay, sir.
So once the what are the conditions that are given in section 16(2) is the receipt of goods and the registration, whatever the registration will take place, that will be effective from the date of clearance of that vehicle. So in my opinion, if once you have received that vehicle, even if it's a case of temporary number, we cannot say that you have not received the goods.
Okay, sir.
Because simply because the temporary number is appended to a plate, the conditions that are laid out in the Motor Vehicles Act, they cannot deny this input tax credit under section 16(2). That is my opinion.
Adding
So
to this,
should be available.
yes, sir. Adding to this query, since the vehicle has not been utilized for any of the taxable supplies or the exempt supplies, will Rule 43 be attracted?
You see, Rule 43 not only talked about goods used, but also intended to be used, and that is very important.
Yes, sir.
Both in the Rule 42 as well as in the Rule 43. Rather, in the section 16 itself, the words used or intended to be used have been mentioned. So, irrespective of you are actually not using those goods, that does not take away the entitlement of ITC.
Okay. So, sir, I was of the opinion like I'm not required to reverse unless and until I have used it for a taxable purpose or the exempt purpose. So, but basically we are required to take those also to consideration for the purpose of reversal under Rule 43. Okay, sir. Sir, with regard to this truck only transport industry, like there are certain trucks which have been procured at one unit. Like a transporter is having multiple GST numbers all over India. He has procured certain trucks at one GST, quoting one GST number, but those trucks have been used for provision of services from the different branch. So will the branch who has purchased those trucks is required to make a cross charge or an inter-unit service charge bill on the other branch, so that the other branch, acting as a profit center, makes out the bill to the actual service receiver?
Yes, definitely.
Okay.
Cross charge will have to be made.
Okay. And there is no exemption for it, no, sir?
No, definitely not.
Okay, sir.
Cross charge will have to be made because you are putting all those, you are making one of the registrations as an owner of that taxation.
Yes,
now
sir.
what is happening is the goods are actually being used somewhere else for some other registration. So ITC practically should not be available to the GSTN in which these trucks have been purchased.
Yes, sir.
So some kind of renting arrangement, rather, apart from the this cross charge, some kind of renting arrangement will have to be made, that why these goods have, these trucks have actually moved on to some other GSTN because these have been rented out. So maybe that renting of motor vehicle along with cost of fuel, etc., that 12% taxation you might will have to go over there.
Sure, sir. Thank you, sir, for answering my queries and taking us forward for so many of the threadbare points. With this, sir, I would like to present to you, sir, a memento, a token of thanks. For the session, we'll be continuing to disturb you for the future sessions as well. Thank you, sir.
Thank you.
Thank you, sir. These, I would like to thank all my participants who have attended this seminar and request for their leave. Thank you.